Wader of all places. That's the conversation.
If it's going to be fascinating to see. Right now, our interview of the day on the American response, and particularly the American and NATO response to what we've seen with war in Ukraine. James Stavridis has been a wonderful friend of the show, of course, with his public services in the Navy as a European commander and also at the same time NATO Supreme Allied Commander. Author is 2034. I can't say enough how timely that frightening book is. My book of the summer, I believe it was a year ago. Can't remember, James. Now, James Stavridis, I'm going to talk about Ben Hodges, General. I'm going to talk about Mark Kimmett, General. They have an urgency about urban warfare. Give us the same urgency about naval warfare in the Black Sea. What does Ukraine, Russia look like on water?
Russia dominates the Black Sea and really has for centuries. They've been the dominant power there. If you spin around the Black Sea, Tom, you see Romania, Bulgaria, Turkey, Georgia, Ukraine, but it's Russia is the monster force there. They will continue to dominate it. Turkey has a chokehold on the Dardanelles, the Bosphorus, the strait that controls access to the Black Sea. But it's going to be Russia's game up there because that's where their Black Sea fleet is located. Think having the U.S. Navy's 7th Fleet inside the Black Sea. That's the advantage that the Russians have.
In your important essay for Bloomberg Opinion, the single money sentence is at your time of duty, there were 400,000 Americans in service in Europe, and that's been whittled down for whatever reason to 100,000. What is your timeline to see a rebuild of American military in Europe? Is it a question of weeks and months, or is this going to be long, drawn-out, extended process?
Depends on Vladimir Putin, and so far he is certainly giving us plenty of reason to think we are going to increase our troop levels in Europe. I don't think we're going back to 400,000 the way we were during the Cold War, but look for the U.S. presence to go from around 50,000 to perhaps 70,000 permanently based forward if Putin continues. And more importantly, Tom, you're seeing the Germans and others increasing their defense spending extremely quickly. All of that will move troops to the borders of NATO. The NATO alliance will keep Russia out.
When you say the borders of NATO, Admiral, are you talking about Poland, most importantly?
I think it's Poland, but also all around the Eastern Europe. So think Estonia, Latvia, Lithuania, Romania, Bulgaria. They have either borders on Russia or borders on Russia client states like Belarus, or, as to the conversation Tom and I just had, borders on the Black Sea. There's going to have to be an upgrade, if you will, in troops forward. The alliance realizes that. It's in progress now.
Admiral, there's a story today on a Bloomberg terminal that Putin's endgame is starting to look more and more like simply reducing Ukraine to rubble. What do you suggest are the next steps, since the sanctions have gone almost as far as they can go at this point, the next steps to try to bring a swift end to this conflict?
First, unfortunately, I agree. When you're the Russian military and you have performed as badly as they have, with poor logistics, poor command and control, war criminal behavior, at some point your only tool left is a big hammer, and they're starting to swing that thing hard through Ukrainian cities, trying to make Ukraine look like Syria on the Dnieper River. That's a terrible outcome for everybody, and it's war criminal behavior. What we should do about it is continue the massive sanctions. They will bite. That'll take time. On the military front, continue to supply the Ukrainians with absolutely everything they need, short of our troops going in, boots on the ground and fighting. That's a path to World War III level confrontation. But that's more material going into Ukraine. And above all, let's get these MiG-29 fighters from Poland into the hands of the Ukrainians. It's complicated, I get that. But that, I think, could be a game changer.
We got to stop the show here, General. Admiral, excuse me. I got the wrong service there. Admiral Stavridis, this is really important. The images right now are the Opera House of 1887 in Odessa. This isn't Normandy where the Germans are shooting from the cliffs. This is Odessa with sandbags and a bunch of Ukrainians. How do we get those jets from Poland to Odessa to defend against a well-equipped Russian Navy?
The Poles have said they're willing to turn them over to the NATO alliance, fly them into Ramstein Air Base in Germany, Tom. I think the next stop for them would be put them in Lviv. Lviv is going to stand for a long time. The Russians are not on some effective high-speed blitzkrieg across Ukraine. Put them in Lviv, build your defense from there, turn them over to the Ukrainians, let the Ukrainians do what they want to do. Let them create a Ukrainian no-fly zone.
What does that do to NATO and NATO being independent? I mean, if we go into Western Ukraine and Lviv, that's fine, but the zeitgeist this morning is this is hugely problematic for the NATO you're experienced with.
The answer, Tom, is turn them over to the Ukrainians. Do not operate them with NATO pilots. When they are turned over to the Ukrainians, they become Ukrainian jets operating out of Ukrainian bases in Western Ukraine. NATO can correctly say it is not a belligerent in the combat. Is it somewhat risky? Absolutely. But at this point, go back to those images you were showing a minute ago about 2 million refugees. We're going to have to take some risk to solve this problem.
Meanwhile, on the Russian side, Admiral, how much are they running out of the fuel, and I mean this in every meaning of the word, to continue with this battle? And I'm talking about this with parts that are getting stalled out as some of these sanctions bite that they need to repair their planes. I'm talking about the fact that we have not seen the full air power of the Russian army despite Vladimir Putin's resolution.
All of the logistic failures are coming home to roost. Russia does not have the kind of 21st century military that NATO does, that the United States has. And you see always, and this is true in business as it is in war, logistics eat strategy for lunch. Professionals know logistics are what drive wars. And so we ought to capitalize on that at the back office end, crushing them with the sanctions, and at the front office end, if you will, the client-facing end of this, by giving the Ukrainians the tools to take apart what they can put on the battlefield.
Admiral, a clinic, as always. James Stavridis there, the former Supreme Allied Commander at NATO. Thank you, sir. Tom, we have to take risks, the message from the General this morning.
I heard logistics from Ken Rogoff 20 years ago, John. He brought it up, very prescient, the great Harvard economist. And, you know, it's something we're all studying up on right now. But the logistics here, John, as you mentioned the other day, is some form of ratio of 6 people needed to advance 1 person to the front line. The workup I saw a couple days ago by someone informed was 500,000 people of Russia to make this work for Russia. They're nowhere near that statistic.
Well, Admiral Stavridis, as you know, Tom, has done a lot on China as well. Did you see what Gina Raimondo said in the New York Times yesterday? I thought this was fascinating. The Commerce Secretary, here's the quote, issued a stern warning Tuesday to Chinese companies that might defy U.S. restrictions against exporting to Russia, saying the United States would cut them off from American equipment and software they need. I don't think we've seen this fully play out, Tom.
Oh, no. This is really important, John. The media, and we're guilty of this. I think we're working overtime trying to do this. This is not a game show. Day 11, day 12. Stay tuned for day 15 of the war. This is not a game show. And Secretary Raimondo and others, including Admiral Stavridis, are working on a timeline different than the media.
The Admiral appreciates, Lisa, that we've got to wait to see what happens here. There are serious risks still building. And when we start to talk about peak sanctions, I don't even know what that means, peak sanctions.
Yeah.
What does that mean when you hear those words from the Commerce Secretary in America?
Especially when the tightening of the screws means eliminating all the potential loopholes, and that goes to some of the comments on China. And yet, what kind of conflict do you engender if you start to go after that type of activity? How much do you push Russia and China closer together versus further apart? I mean, there's so many complexities still in the works, and this is not a game show. And there are people suffering, and more importantly, it is very difficult to know what the outlook could be and should be with the response.
This from Reuters moments ago. China telling refiners to halt April gasoline and diesel exports. That coming from Reuters just moments ago, Tom. China to tell refiners to halt April gasoline and diesel exports.
It's going to fold into growth as well, as we touched on with Adam Parker, who's so good at the math and the statistics of the game. John, you know, we're looking at inflation tomorrow. I get that, and the whole Fed parlor game. But what does this mean for global growth, continental growth of Europe. And yes, selfishly, what does this mean for American growth?
Futures up 64, advancing 1.5%. Yields higher by 5 basis points, going into CPI tomorrow, just short of 192s, nicely through 160. And crude a break of 120, a 119 handle at the moment, down a little more than 3%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Heineken has joined the list of companies that has quit doing business in Russia. The Dutch beer maker is stopping its exports to Russia and is halting investments there. The move comes a day after McDonald's, Coca-Cola and PayPal announced they were temporarily halting operations in Russia as well. The UK is ratcheting up sanctions against Russia. It's now banning all Russian aircraft from landing and overflying Britain. The UK is also prohibiting aviation and space-related exports. That ban also covers insurance and reinsurance products. The former CEO of Russia's Yukos Oil says that the country has moved from an authoritarian regime to a totalitarian. In an exclusive interview, Mikhail Khodorkovsky told Bloomberg's Amory Horton that change is coming to Moscow.
The regime will change, no doubt about it. Before, it might have taken 10 or 20 years from now. But now, it may happen much faster.
Khodorkovsky also said that all of Russia's oligarchs should be targeted by sanctions. In South Korea, exit polls in the presidential election show conservative candidate Yoon Suk-yeol with a slight lead. Less than 1 percentage point separates Yoon from progressive Lee Jae-myung. Yoon is hawkish on North Korea and China and favors closer ties with the U.S. President Biden will order government agencies to take a closer look at issues surrounding the fast-growing cryptocurrency market. It's the first attempt at coordinating the government strategy on digital assets. Still, it falls short of providing a clear direction on regulation. That's something crypto firms have been calling for. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I can tell you, as of this morning, there is no physical shortage of oil, but there is a very strong perception in the market because of the volume that is at stake.
Mohammed Barkindo, the OPEC Secretary General. Futures this morning, good morning, up 1.4% on the S&P, on the Nasdaq up 1.8. Yields higher by 5 basis points on 10, just short of 190 going into CPI tomorrow, looking for something close to 8%, almost 190 on 10s, 2s at 165, Tom, up 5 basis points, and all eyes on crude as always, 120 and down 2.9%.
It is extraordinary, John, that the massive pullback we have seen in crude this morning, I'm being facetious, of course, gets us out to 1.8 standard deviations. That's how extended we've been.
Year to date, up 60%, Tom.
The move.
Up 60%. It's been quite a move.
124.56 on crude, down $3 right now. Brent crude there, futures up 61. Ellen Wald has been kind to brief us here on any number of days, senior fellow at Atlantic Council. Ellen, can you explain Riyadh to us? You are truly expert at Saudi, the name of your book. Can you explain why they won't take the phone call from the President of the United States?
Well, I can't exactly explain why they won't take the phone call, but I do think that their position on oil production has been quite clear from the beginning and is in line with the rest of OPEC+. And if you look at the trajectory of Saudi OPEC politics, I guess, over the past couple of years, you can see how much closer they have moved to Russia and how much Russia's participation in the entire OPEC Plus group really depends on their concept of market management at this point. They're looking beyond the current situation to the future, in which they want to keep Russia in the fold. They want to keep Russia in this group because Russia's production power means that OPEC actually has a shot at some kind of market management, whereas before they basically had no way to affect the market other than all-out production. So if they dump Russia now, the results in the future could be disastrous for them.
Who is they? There is Saudi Arabia, but what is the relationship around the fractious Persian Gulf of Qatar? You know, the tribal relations back decades and decades and decades. Is this Saudi Arabia alone, or is there a Persian Gulf unity?
Well, there's Saudi Arabia and the UAE, and right now the two of them are the strongest members of OPEC and OPEC Plus. They've got the most spare capacity, and the Saudis have really pushed this relationship with Russia from the start. It predates the current Saudi oil minister, Abdul Aziz bin Salman. It predates him. It was really forged by Khalid al-Fali, and he spent a lot of time and effort cultivating this relationship with Russia. It goes beyond just OPEC to, they had a lot of, there was a lot of visiting going on. He went to visit Russian oil facilities in Siberia, and Novak came to Saudi Arabia. And so, and the UAE has also been a huge proponent of this relationship as well. Of course, they're the two that hold the most spare capacity and could potentially actually do something about oil, but they are very much set in remaining within the confines of their plans and their deal. They don't want to go outside this OPEC plus deal. I think if there is some kind of major market dislocation in terms of energy supplies, they could be compelled to discuss it. But at this point, it's very, very difficult. It's not the same as say, sanctions on Iran or Venezuela, who are not the largest oil producers. This is Russia we're talking about.
So, Ellen, given everything you've just said over the last couple of minutes or so, is this cartel there to manage the market or manage the foreign policy goals of the individual members?
Well, they'll tell you they're there to manage the market, but it's never without foreign policy goals and geopolitics. That's always there and always present. And the way that they're spinning this is really, this is not a market issue. This is a political issue. And even if we did increase production, we'd still have this geopolitical issue. And I do think at some level they're right, because they can't fix the geopolitical issue. But at another level, yes, more oil on the market would bring down prices. And I do think eventually we will see the market even out in terms of, who's sending oil where. But this position is definitely different from what we've seen before during previous global kind of issues, and the Iraq War, for example. The Gulf War is another one. But OPEC Plus is a different group now, and they have moved a lot closer to Russia and a lot farther away from the West at this point.
Well, without a supply response, Ellen, how close are we to demand destruction? Are we to the point where oil prices have reached high enough for people to pull back how much they travel and how much they heat their homes?
That's a very, very good question. And I do think it depends somewhat on how much inflation is really affecting everything, because if you try to compare, say, gasoline prices now to 2012, when they were also over the national average was also over $4 a gallon, it's difficult to make that comparison in absolute terms, because inflation rates are so much higher now. We're talking 7% inflation compared to 2% inflation. And so you've also got a lot of pent-up demand from the coronavirus pandemic. So I think this summer we will see people making different choices than they might have if oil prices were, national average below $4. If we're seeing, prices in the $6 and $7 range, I think we will see different choices, and that could affect demand. We could see lower gasoline demand across Europe, for sure, and across the United States. The question is, will it just be affecting consumers' vacation habits, or is it going to affect, say, GDP? Are we going to see effects in industrial output because
demand
of the
destruction,
price of diesel?
All of the above.
I think that we will start to see that pretty soon. I think we'll start to see it actually sooner than people think, because there are rising costs all across the board.
Ellen, thank you. Wonderful to catch up with you. Always is. Ellen Wald there of the Atlantic Council. That final piece there, Lisa. How does this shape discretionary spending? And for that matter also, in addition to that, how does it shape credit, the credit story in America? Do you pull back elsewhere, or do you take on more credit?
Yeah, and frankly, we're even hearing from the airlines, they are loath to increase their costs that much, they increase the cost of airline tickets because they don't want people to stop their travel. And yet they don't have a cushion to absorb those extra costs. By the way, yesterday, ConocoPhillips CEO came out and said, we are getting to the kind of prices today that are encroaching upon the area of demand destruction. So he sees it already beginning.
120, Tom. 120, 119.
Still not used to it. Yeah, I'm still not used to it. We've come back a little bit. I'm going to call it a very constructive tape, John. It's off the radar, but I do want to note the unraveling of Turkish lira. It's ever so gentle, but persistent, John.
The airline stocks year to date on the S&P, they're down 17.5%. Wow. Brutal. Futures up 1.5 on the S&P, yields higher by 5 basis points, back through 190. Two's higher as well. Going into CPI tomorrow morning, crude pulling back down almost 3 percentage points to 120.17.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The situation in Russia-Ukraine invasion is critical for raw materials.
It's adding fuel to an already well-kindled inflation fire.
The longer it goes on, obviously, the larger the ramifications are. That is putting all of us in a bit of a bind, but it's really putting the Fed into a bind.
They absolutely, positively have to get off the zero bound.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Bouncing back from a 4-day losing streak from New York City this morning. Good morning for our audience worldwide on TV and radio alongside Tom Keene and Lisa Abramowitz. Futures up by 1.5% on the S&P 500. We've had the action from the President of the United States, TK. We wait for the reaction from Russia.
Well, the reaction from Russia, we're getting a little more headlines, I would say, out today. The zeitgeist from Russia today, John, is a little more eventful than it was yesterday. But what I do notice in the last hour of surveillance, there's a more constructive tape. There's great correlation here. And I want to be careful here. It's not a turnaround, but there's a relaxation from the tension as witnessed by Euro, Swissy, and gold.
Well, if you're in the Treasury market, Tom, you start to think more about CPI tomorrow morning. The estimate close to 8%. Two's at 166 now, up 6 basis points on the day. Higher the year, the highest we've seen going back to 2019.
We touched on this yesterday, John. Let's go there right now. Is inflation tomorrow like payrolls last week? Nobody really cares.
Can you ignore CPI tomorrow, Lisa, like we ignored payrolls on Friday?
Well, it gives you a sense of where we're starting from in terms of how much inflation could go up. And I think this goes to the Jeff Gundlach point of seeing inflation go up to 10% this year and fall back to just 7.5% by year end. That's his call. How much are we looking at momentum that will only be accelerated by what we're seeing in the commodity space, John?
Elsewhere, more sanctions from the EU. More sanctions from the EU and Ursula von der Leyen in the last hour or so. That headline read as follows. We are further tightening the net of sanctions responding to Russia's military aggression against Ukraine. 160 individuals, oligarchs, the Russian Federation Council members, the banking sector in Belarus. Tom, there is a conversation this morning about peak sanctions, and we've been discussing that. Peak sanctions where? From who? The Russians this morning, this coming from the Russian president's spokesman, Peskov, Russia may rethink energy commitments after sanctions. Tom, I don't think we've still fully realized how this will play out in the coming weeks and months.
Well, it's about leakages and the leakages of power and the leakages of authority, something in the world of what Dan Tannenbaum, who's helped us so much on this, and what Secretary of Commerce Raimondo said, I believe it was overnight, John, what Gina Raimondo said is the leakages through China maybe is the one thing we have to focus on.
In the New York Times, Lisa, I know it got your attention too, a stern warning from the Commerce Secretary to Chinese companies that might defy U.S. sanctions, going on to say they would get their own restrictions. The U.S. could cut them off from American equipment and the software they need.
How does this end if you've got the U.S. pressuring China to distance itself from Russia at a time when there were reports yesterday that China is considering taking stakes in some of the major commodity players in Russia as all the big U.S. and European players pull back? How much is this going to evolve into a U.S.-China issue as much as a U.S.-Russia issue?
Futures this morning, they bounced. Let's whip through it. Up 1.5% on the S&P, on the NASDAQ up by 1.8%. We talked briefly about turning the price action of the last couple of days upside down somewhat. Yields higher by 6 basis points to 190.79 on 10s, and crude, it's a break of 120, Lisa, 119.85, down 3%.
And things are moving very quickly in all directions. The volatility absolutely unprecedented in so many asset classes. Does any of the economic data that we're getting matter? I would argue it does. And at 10 a.m., this particular data point matters quite a bit. We get the January job openings data showing how many people are missing from the workforce, basically. And we have nearly 11 million job openings here in the U.S. How much does this sort of edify this feeling from Jay Powell of an overheating labor market? Again, it is backward looking, but it gives you a sense of how much momentum there is heading into a period of time where disruptions are only going to continue, at least for the foreseeable future. Today, we also get EIA crude oil inventory reports, 10:30 a.m. How much do we see a supply response to what we're seeing in the price action, the highest levels going back to 2008. And then at noon, USDA World Agricultural Supply and Demand Report. To me, this is the bigger story. Food security. All around the world, we're seeing wheat absolutely fluctuate, now limit down on the Chicago Exchange. The volatility has been absolutely unprecedented. Soybean oil futures, I have been watching, especially given China's dependence on some of the Ukrainian and Russian imports for some of these products. And at 1 p.m., the U.S. is planning to sell $34 billion of 10-year notes. We have seen 10-year yields rise at 1.90761 now percent. However, still far below where they should be if you believed the inflation expectations, and you could see that in the real yields, still deeply negative, down more than 1% below zero, John.
Lisa, thank you as always. Hearing from the Prime Minister Boris Johnson in the UK, speaking in the House of Commons, going on to say that they will set out the UK energy plan in the coming days. Also, this report from Interfax just getting my attention, Tom. The Russian President, Vladimir Putin, to meet with government members tomorrow, March 10th. The government to discuss minimizing sanctions impact. Tom, the amount of companies that have pulled out of Russia in the space of a couple of weeks, what will that labor market look like in the next few months?
Yeah, and that's a key phrase, John, labor market. And one of my themes starting like 3 a.m. this morning was a basic idea of what's the growthiness of all this upset that we're seeing. We're staying away from the measurement of economic growth and what is the key to politics. Politics is about jobs, and it's got to be front and center for Mr. Putin and his people.
Team coverage starts right now with Bloomberg's Anne-Marie Hordern in Washington, Tom McKenzie on the border in Poland. Anne-Marie, first to you. The president has made a move, and now we need to see what he does next on the energy front. What are you focused on?
Well, today I want to see what Russia says that they're going to come out with in terms of this banning of list of commodities. What potentially can we see in terms of repercussions? Less so for the United States, which is definitely more insulated when it comes to reliance on Russia, but definitely for Germany. This is going to be a big problem. And I spoke to Mihail Hodorkovsky yesterday. This is the former Yuko CEO. He spent a decade in jail, and then he fled Russia, and he lives in exile now. And he said this was a massive mistake for Western Europe to be so reliant on Russia when it comes to fossil fuels and commodities.
Tom McKenzie in Poland towards Romania and Moldova, away from Belarus, on the border with, I guess, millions of refugees. Tom, I'm not seeing enough reporting on what happens next. The refugees get to the border, then what?
Yeah, Tom, we're on the border, Medica, which is on the border crossing between Poland and Ukraine. Logistically, there are facilities in place. They've been put in place by the Polish military, by the Polish police, and volunteers from all over the world. We've met volunteers from the US, France, Germany, and others. But logistically, this is just the beginning. They've had that journey through Ukraine. They've waited for hours, sometimes days, overnight. Most of them, don't forget, 90% women and children in freezing conditions. It is very cold here. It's snowing throughout the day. This is just the start. Logistically, they have to work their way through Poland if they find a place of residence, or indeed other parts of Europe. We've had people come down from Germany, put people in the back of their vans and cars and take them off to their residences. The Polish government has put aside $1.7 billion to help fund this. But you're absolutely right. We are in the only opening stages of this. 1.2 million people into Poland just in the last 12 days alone. And it underpins the human toll of this, underpins that decision-making amongst European leaders when it comes to how hard and how aggressive to go on Putin.
Know your map between Romania, Tom, and Poland is Slovakia and Hungary as well. Do they have the reticence that's being reported in the United Kingdom on taking in refugees, or are they using those two borders?
So they've been more generous, certainly, those two nations. Hungary has taken in about 200,000 refugees from Ukraine, but that compares to 1.2 million, again, for Poland. So Poland is taking in the vast majority. The UK, the last stats I saw, had issued just 300 visas or thereabouts for Ukrainian refugees. The UK is a bit player in this. Other nations that border Ukraine are taking in refugees, but it is, again, Poland that is front and center on this. Overall, you've seen 2.1 million refugees from Ukraine. The biggest refugee flow we've seen in Europe since World War II. The United Nations organizer here told me last night he thinks that could get to 4 million in the next couple of weeks.
Just quickly, Anne-Marie, given this backdrop, this is the reason why you get this urgency and why we got that Gina Raimondo statement about how they're thinking about possibly taking action on Chinese companies that do not comply with sanctions. Do we have any sense of whether there'll be any action on that front in the near term?
Well, Gina Raimondo is basically throwing out this threat and this warning to Chinese companies, and it's a little bit reminiscent of what we saw in 2020 with Huawei, right? That really crippled how Huawei was going to expand, given these sanctions and these bans that the United States was putting on it. Then you saw a number of countries not want to deal with that company, and this is what they're saying to China. If you go against these sanctions that we've laid out, you are going to be cut off from the technology that your companies need to produce this material. So I think it was a pretty stark warning to China and potentially the United States trying to shift China's stance in terms of how they deal with President Putin and Russia.
Anne-Marie, always great to catch up. To Tom McKenzie, fantastic reporting, as always, sir. That headline that we got from Reuters on China, Lisa, that got my attention, yours and Tom's too.
Yeah.
China telling refiners to hold April gasoline and diesel exports. That's the immediate focus for these countries now.
Energy security, food security, these are all immediate concerns, and part of the reason why prices have been fluctuating so much, both in the oil patch as well as other soft commodities, is simply because the likes of China are trying to stockpile ahead of what they see as only increasing disruptions going forward.
And that, Tom, is why you see so many of these commodities trading in so-called backwardation. It's this massive scramble to get everything up front and now.
And how does Africa scramble on food? I'm not quite sure I figured that out. We have David Malpass of the World Bank with us, and I know that will be front and center for World Bank, John. But Ben Laidler in his morning note says, look, this is all great. Food will have a larger impact than oil.
Couldn't agree more. I mean, we said it in the last couple of weeks, Lisa. Energy gets so much more attention because here we are on Wall Street looking at crude, but food, Egypt, wheat.
Yeah.
We talked about it a million times.
86% of Egypt's wheat comes from Ukraine.
What a stat. What a stat. Futures up 1.5% on the S&P, on the NASDAQ up 1.9%. Crude back down 2.4%. WTI 120.75. From New York on TV and radio, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Ukraine, President Volodymyr Zelensky says some civilians are escaping around Kyiv after Russia agreed to open humanitarian corridors. But Ukraine says not all of those pathways are open yet. Meanwhile, the U.S. warns that Russian forces are stepping up their bombardment of Kyiv. Democrats and Republicans in Congress have struck a deal on a long-delayed spending bill that funds the U.S. government and includes $13.6 billion for the war in Ukraine. The measure would pay for refugee assistance and to replace weapons given to Ukraine. President Biden will order government agencies to take a closer look at issues surrounding the fast-growing cryptocurrency market. It's the first attempt at coordinating the government's strategy on digital assets. Still, it falls short of providing a clear direction on regulation. That's something that crypto firms have been calling for. And in South Korea, exit polls in the presidential election show conservative candidate Yoon Suk-yeol with a slight lead. Less than 1 percentage point separates Yoon from progressive Lee Jae-myung. Yoon is hawkish on North Korea and China and favors closer ties with the U.S. And billionaire bond fund manager Jeffrey Gundlach warns that U.S. inflation may approach 10% this year. He says that underscores the need for the Fed to aggressively tighten monetary policy. The CEO of Double Line Capital also said that bonds are now overvalued whilst emerging markets look cheap. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
You saw the president bring the IEA together last week to announce a 60 million barrel coordinated release. The U.S. will do 30 million of that. We're actively consulting with our allies and in the IEA context about whether it's appropriate to act and do more with those releases.
Good to hear from Brian Deese, as always, the White House National Economic Council Director. Futures this morning, they are positive 1.6%. We bounced back from 4 days of losses on the S&P 500. The NASDAQ up a little more than 2%. Yields heading north, up 6 basis points to 190.79 on 10s, and crude lower to 120.80. We are down by 2.3%. The effort on energy, Tom, and the supplies of it. Yeah. The Wall Street Journal, here's the quote from them. The White House unsuccessfully tried to arrange calls between President Biden and the de facto leaders of Saudi Arabia and the UAE. This is a tough one, Tom. They are not taking his call.
We're thrilled to bring you this morning Ellen Wald with her book, Saudi, which is definitive on this. I thought Ellen John was just brutal. I mean, she just was direct.
Well, Tom, the issue right now, I mean, the cartel, is it there to manage the market or to manage the individual foreign policy goals of the individual members? And those two things have never been mutually exclusive at the OPEC story. But at the moment, it feels like it's leaning a lot more to one direction than the other.
I would say there's some complexities, to say the least. Right now, with our global best-in-class commodity coverage is Will Kennedy. He does any number of things for Bloomberg in terms of managing Javier Blas and the rest of the team. Mr. Kennedy joins us this morning. Will, I want to guess that when you were in a dorm room at the University of Sussex a few years ago, you had an electric bill or a gas bill to pay. I think this has been underreported. How much and when are those bills going to skyrocket for Sussex, the rest of Great Britain, and for that matter, Europe?
Well, it was more than a few years ago, Tom, but I think you raise a very important point, is that there's a storm coming here. I mean, there was already a storm coming before the war that, you know, gas and power prices in Europe were unprecedented levels, and that's only intensifying. I mean, gas is down a bit today, but it's rocketed up in the last 2 weeks, and power prices across Europe have been at unprecedented levels of multiples, many multiples of what they were a few years ago. Now, that's not been felt by the consumer yet, because in almost everywhere it's delayed or there are subsidies in place. But governments are increasingly going to face a very, very stark choice. Either they spend hundreds of millions of dollars subsidizing people's energy bills, or there's going to be an inflationary cost of living shock, which is much, much worse of anything that we've seen yet.
I've got 18 ways to go. I'm going to give you an open question, Will Kennedy, because I'm not smart enough to guess the pipeline. Which pipeline has your most acute focus this morning?
I think it's probably Nord Stream 1, because again, the Russian government reiterated a threat that it first made a couple of days ago, that it is considering energy supplies and reacting to US sanctions, European sanctions, by cutting supplies themselves. And the pipeline that they've highlighted is, everyone talks about Nord Stream 2, the new pipeline, which is now not going to happen. But for the last decade and more, there's been Nord Stream 1, which brings gas directly from Russia to Germany. There are now hints from Moscow that they will stop that gas flowing, and that has huge implications for the German economy. It would see gas prices rocket, and it would be a real shock. So I think that's where our focus is. Whether they follow through remains to be seen, but the very fact that they're putting that on the table, they've always emphasized with Germany, we are a reliable supplier, and all of a sudden they're saying, in this situation we may not be, and that could be a huge story.
It's definitely a big focus, certainly for Germany and many countries in Europe. Another big story that people are focused on are the wheat fields in Ukraine. And I say this as wheat has been experiencing the most volatility ever. And we were talking with the Ukrainian central bank president. John was asking about how long people can remain out of those fields before it becomes a serious food security issue for the world. How far are we from that point? Do you have a sense?
I think that the world has a food security problem already, a huge one. Wheat has risen almost 80% this year. Edible oil prices, something that is very keenly felt by households, especially in emerging economies where these edible oils represent a huge proportion of their everyday spending. The crisis is here. People are feeling this right now, and they're going to feel it much more in the weeks to come as this ripples through the food supply chain. But I don't think that anyone thinks this is something that's coming or dependent on what happens on the ground in Ukraine over the next few weeks. It's here. Ukrainian exports are close to the world. Russian exports are very hard to trade. That's 25% of the world's wheat exports. We wrote yesterday that those two countries account for 10% of the calories traded globally, if you want to look at it that way. The crisis is here. The only redeeming feature is that rice prices, which are hugely important to Asia, haven't yet risen. That's a market that's concentrated on Asia and not affected. But that aside, this is a food crisis on a par with what we saw in 2011.
Well, are you seeing any signs of increased nationalism kicking in various places? The EU has a huge farm lobby. We know that story well. Just saw this story from Reuters in China asking refiners to hold April gasoline and diesel exports. Do you think we'll see more of that across a range of commodities, Will?
I think governments are going to have to become more involved, and I think those kind of protectionist measures are one thing. I honestly think that some forms of rationing are going to come onto the table, whether that's carless days perhaps, or the management of industrial demand. I think that we're going to see a real squabble. Think about the LNG market. Europe has put forward this plan to replace 2/3 of Russian gas this year. Basically, that means bidding whatever it takes to lure LNG away from Asia.
Yeah.
Now, what does that mean? That means that there's less for China, Japan. They're going to have to pay more. They're going to have to use more coal. For emerging countries like Pakistan that rely on this gas to keep their economies going, this is a catastrophe. So you're seeing it's going to mean a fight for resources, and governments are going to have to get more involved. We've already seen the German government directly fund LNG purchases this summer so that Germany can build up its stockpiles. All of these things are coming in our view.
Will Kennedy, just brilliant. As always, thank you, sir. That's the reality. I don't even think that conversation has got started in a major way. That line from Will there, that we could have carless days where you can't drive an automobile. Tom, we need to pull back on energy consumption, and governments haven't even started having that conversation yet with the public in a major way.
We had it in the 70s, and I did the chart the other day on inflation-adjusted commodities off the Bloomberg Commodity Index, John, and let me cut to the chase. Even with this lift up, we're nowhere near where we were in the 70s. John, amount spent on food in Egypt, 34%. Amount spent on food in America, 9%. That's the difference.
Big numbers. Futures up 1.6 on the S&P, on the NASDAQ up 2 percentage points. Yields climbing higher 6 basis points to 191. Crude down 3% to 119.80. From New York, heard on radio, seen on TV, this is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Looking over to Europe, the only two industry groups in the green for the year, basic resources and energy, are the only two industry groups today in the red for the session. That gives you an idea of the turnaround today, at least. 4-day losing streak on the S&P, we bounce up 1.6% on the S&P 500. On the NASDAQ, up a little more than 2 percentage points. Going into tomorrow, you know the story now for CPI in America. Very close to 8% is the estimate. Here's the bond market, 2s, 10s, and 30s. Your 10-year yield, short of the highs for the year. They're about 14 basis points north of where we are at the moment, north of 2%. But 2s are there. They're through the highs of the year. This morning, very close to 167. Right now, 165 and up 5 basis points. That curve has got flatter over the last year or so, from 77 basis points down to about 25. And a conversation, Tom, that Lisa has been pushing for quite a while now. Will this Federal Reserve have the appetite to start an interest rate hiking cycle through the year with 2s and 10s already that tight, that curve, that flat?
I don't want to steal Lisa's thunder, John, but as part of the overlay here is the 3-year auction really didn't go all that well. And, you know, you see where the LIBOR, OIS, and the other measurements of short-term trust are. There's a little bit of tension out there into this report tomorrow.
Lisa, did that just happen?
That just happened. That's exactly what I'm thinking.
Quote an auction, cite an auction.
He paid attention to the auction.
The Bramo
this is
Cam
amazing.
caught it.
I know. I was really in shock. Honestly, it was important, though. It shows the concern that people have in the near term about the inflation outlook, and frankly, the response that the likes of Jeff Gundlach have come out and said has to be strong and has to be soon.
That's the inflation story. Let's look at crude too, Brent and WTI, and think less about inflation and more about perhaps growth and demand. Lisa, with Brent at 124, let's call it 125, and WTI at 119, let's call it 120. Do we start to think about demand destruction? And when we think about that, where does it curtail the discretionary spend for the consumer? Or does it start to build out credit again here in America and elsewhere too?
Especially because you've got a lot of banks and a lot of independent credit officers basically trying to lend as quickly as possible so they can boost their bottom line. So how much do people pad that at a time when ConocoPhillips CEO actually came out yesterday and said, we're getting to the point of demand destruction here at 120 a barrel.
120 and 125 respectively. It is the last couple of days upside down in the market today. Futures up by 1.6%. That's the cross-asset price section with your single names. Let's say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Yeah, an upside down from what we saw the previous few days here. You take a look at those big cap tech stocks. They're trying to get their mojo back. Apple coming off 4 straight days of losses, looking now to reverse that. The shares higher by about 2%. All of the big cap tech stocks following that lead. Tesla, Nvidia, AMD, Microsoft, Amazon, you name it, higher here on the day. Meanwhile, a lot of those energy stocks that had rallied hard over the last few days are reversing that, at least on the day here. Chevron, which had rallied 8 straight days prior to today. The shares down about 3% here in the pre-market as a lot of people maybe take some of the profits off the table. And keep an eye here on Bumble. They actually reported earnings after the bell last night. This is tangentially related to the Ukraine-Russian situation. Remember, Bumble has deep Russian ties because of some early investments, as well as its Badu app, which is popular there in Russia as well as Eastern Europe. The company did reassure that not only are their numbers for the most recent quarter that they were still solid, but the guidance going forward that would still remain what they had said before. The company said that what's the effect from the war in the Ukraine shouldn't have a huge material impact. Shares higher by more than 20% here on the day. Flip up the board, a couple quick things here going on outside of the Ukraine war. Keep an eye on Coinbase and the rest of the crypto stocks, Tom. We're going to get an announcement a little bit later today from the Biden administration about a coordinated effort to finally provide some regulation for this. And based on some leaked documents that Bloomberg has already seen, it appears that it could, Tom, be a potentially net positive for this industry.
Vixen, two big figures remain Bostic to close. Look for that this afternoon. John, an important headline for global Wall Street. Standard & Poor's Global to suspend commercial operations in Russia.
There goes another one, Tom. I mean, how long's the list now? Is it easier to suggest the companies that haven't left Russia at this point?
Jeff Sonnenfeld at Yale University has done a great job of keeping score on this. And just since the publication of his note, they're in, they're out, there's a huge body led by McDonald's and Coke.
Well, I thought of you yesterday, Tom. McDonald's, just how big is that historically
800,
to see McDonald's make that decision?
And it goes back to the opening of Russia. I mean, you know, the first McDonald's in Moscow and the big news and the splash that made and all there. Let's do this right now. Let's try to do something normal in a very non-normal time. And Goldman Sachs out with great research on this. Peter Oppenheimer and Sharon Bell out of London really thinking about where we are. Sharon Bell joins us now, European strategist at Goldman Sachs, working with Peter. Sharon, buried in your PowerPoint is the thing that I would note. In the United States, we are pushing a one-year anniversary of negative wage growth. With the shock of this war, this invasion, how embedded is our negative wage growth going to be?
I think it's going to get worse from here, quite clearly. You've got inflation now, which is already high single digit. It could go a little bit higher than this. I think everyone will be upgrading their inflation forecasts. Wage pressure upwards will also be high too. Labour market is strong, so nominally wages will be probably reasonably good. People will be seeing incremental wage increases. Vacancies are high, for example, but inflation is going to eat into most of that, if not all of that. So I think you'll still see negative wage growth. It'll probably be worse in Europe, though, than in the US.
Okay, well, I don't want to go all Abby Joseph Cohen on you, but I'm going to do it. I mean, the answer is if you have negative wage growth, corporations adapt. And is the adaption surprise coming that we don't have a strong labor market, that we begin to see some dynamics of unemployment or underemployment?
I think the wage market and the momentum in the wage market and the labour market generally is good at the moment. And I think that there are a lot of vacancies still. And you've seen participation pick up as well. Now, ultimately, companies, you're absolutely right, they do adapt. But I think the thing they really want to adapt to at the moment is the higher energy costs. I mean, those are rocketing higher. So adapting to those, becoming a little bit more efficient in the face of those. And that might mean a bit more investment, but investment often enhances worker productivity as well. It's a complicated picture. I think what we're seeing now is a slightly worse growth inflation mix for the US and a much worse growth inflation mix for Europe. And obviously that will hit consumers.
And Sharon, we've certainly seen this expressed in the euro. We've expressed this through the European banking system, at least the shares, absolutely tanking. Have we gotten to peak pessimism around Europe, especially as the prospect of fiscal spending starts to become possibly more realistic?
Look, there are things Europe could do. Absolutely, you're right. And fiscal spending is the obvious thing. It's the thing that they've started to talk about. There's going to be more military spend. Obviously, there's going to be spend on energy security. Europe has talked about issuing more Eurobond debt in order to finance some of this additional spending. Europe was planning to do the recovery fund anyway this year and start distributing those monies. So there's quite a lot of fiscal spend that can happen. And then on top of all of that, perhaps some help, some cushion for particularly lower income households when it comes to their energy costs. But will all of this really help? Absolutely it will. But there is still a deep negative here, which is these high levels of inflation and potentially demand destruction too. The market's down about 20% from its peak. It's on a PE, European sort of valuations, around about 12, 13 times. That's low versus history, actually. It's a little bit below average, but it's not at the trough levels we saw in the pandemic or in previous crises like the financial crisis or the sovereign crisis. So I think things will stay volatile from here, and it's difficult to see a very short-term sharp bounce.
Well, perhaps not generally, but do you think that the banks in Europe have been oversold on the fear of possible exposure to Russia and a slowdown at a time when there hasn't been a lot of clarity until now?
Banks, they tend to be, well, they're very levered, and by definition, 20 times levered companies, even if exposures on the face of it are quite small, it can make quite a huge difference to the bank sector. Also, things are often quite opaque. You know their direct exposures, for example, if they have a business in Russia, and perhaps they can close that, as many companies have done, but they can have indirect exposures to all the liquidity problems and other things we've seen in the commodity market, etc. So lots of exposures. But in terms of banks' valuations, they are now extremely low. Price to book values in Europe are almost at trough levels, and certainly lower than they were during the sovereign crisis, or are getting to those levels. So yes, I feel that they are getting to be good value for the medium-term investor.
Sharon Bell of Goldman Sachs, got to define the time horizon there. The medium-term investor. What's the medium-term investor, Sharon? Just quickly, what time horizon is that?
So I think for me, the medium-term investor is about 6 months. And how much volatility can you have in 6 months? Absolutely loads. And you could be, up and down each day. We've seen intraday volatility in the single-digit percents, haven't we? Sort of 3-4% easily. So you can have a lot of volatility around that. But lots of investors are more medium term. They're thinking about portfolios that are 3-6 months out, or even longer than that, several years out. And in that sense, we've had a deep correction.
John, was that Warwick Economics going after Bath Economics there? Is that the backstory there?
That's not what that was. I have huge amount of respect for Sharon Bell of Goldman. Just working things out, Tom. Sharon, thank you. As always, got to catch up.
Thank you,
Ignore
Sharon.
Tom.
Thank you.
Ignore Tom. I do that every morning from 6 to 9 Eastern time.
Let me translate this quickly here, because we got serious headlines to get to. But John, let me translate this here. In America, we don't do medium term. In Europe, and particularly in Britain, they're addicted to it.
6 months. Look, I think what Sharon's saying there, and it's a fair enough comment.
Yes.
Own the bounce and maybe not own them for the cycle, Lisa, because this has been the value story of the last decade or so, a value trap and not a value opportunity.
Rent the story, don't buy it. Maybe that's another way of putting it, as we see the longer-term trajectory in much more potentially dire straits, especially if there isn't fiscal spending in Europe.
The European banks up a little more than 5% in today's session. Over the last month or so, down more than 20. It's been tough. Rough, ugly. Up 1.6% on the S&P. Futures bouncing back on the Nasdaq by almost 2 percentage points. Yields are higher by 6 basis points. 10-year yields now through 190. Again, crude back through 120 to the downside, 119, and let's call it 80 cents. We are negative there, 3.2%. Coming up, a conversation with David Malpass, the president of the World Bank. You do not want to miss that with Tom Keene, Lisa Abramowitz and Jonathan Ferro. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Heineken has joined the list of companies that has quit doing business in Russia. The Dutch beer maker is stopping its exports to Russia and is halting investments in there. The move comes a day after McDonald's, Coca-Cola and PayPal announced they were temporarily halting operations in Russia. The former CEO of Russia's Yukos Oil says the country has moved from an authoritarian regime to a totalitarian one. In an exclusive interview, Mikhail Khodorkovsky told Bloomberg's Anne-Marie Horden that change is coming to Moscow.
The regime will change, no doubt about it. Before, it might have taken 10 or 20 years from now, but now it may happen much faster.
He also said that all of Russia's oligarchs should be targeted by sanctions. In Hong Kong, the plan to test the entire population for coronavirus this month has been cut on hold indefinitely. Instead, the city will prioritize vaccinating the elderly. It also will increase the number of hospital beds to treat patients. And the Chinese nickel company, at the center of a historic short squeeze, has secured a package of bank lifelines. Zhejiang Holding Group faces billions of dollars in potential losses on short positions on nickel futures. It has now won credit promises from banks that include JP Morgan. U.S. authorities are investigating Barry Diller's trading in Activision Blizzard options just before Microsoft announced it was buying the video game company. Other investors' trades are also being investigated. Diller denies any wrongdoing. A spokesman says he merely spotted a bargain in the market. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Putin tried for 20 years to create division in Europe, to create division between the US
and Europe. And he's failed completely. We're more united than ever before, and which also means that we don't have the luxury to say that some issues will be off the table. We need to be able to confront everything, and there should be no taboos.
That was Frans Timmermans there, the first Vice President of the EU Commission. Just getting some headlines from the UK Defence Secretary Ben Wallace in the House of Commons, Tom. Wallace saying the UK is exploring supplying anti-air missiles to Ukraine, saying they regard them as defensive. That headline, Tom, coming just moments ago in the House of Commons.
Translate his importance to Prime Minister Johnson. Ben Wallace has been visible to me, John, but I'm sorry, I'm a foreigner. What's Ben Wallace
clearly,
do
the
for
Defence
Johnson?
Minister, Tom, it speaks for itself. We've got to be working out what we can do for Ukraine that wouldn't be seen as an escalation by Russia, that would then involve NATO into a conflict. And I think that's what we're working out when it comes to air support, Tom, from maybe Poland, and then additional support for things like anti-air missiles when it comes to the UK.
Let us get to the institutional conversation of the day. All institutions react. We wait on the International Monetary Fund and Kristalina Georgieva. But David Malpass is at the World Bank. To his immense credit, they have not taken down World Bank research on the Russian Federation, but front and center on the front of the page of their website, the World Bank Group is taking quick action to support Ukraine. David Malpass, what do you do this morning?
Hi, good morning, Tom. Well, I'm grateful that our board on Monday passed a major package Monday afternoon, so that money becomes available right away, meaning, I don't know, today or tomorrow, through means for Ukraine, and that helps them survive as they're fighting back against the Russian invasion. It goes for things like food and salaries and doctors that they desperately need. So today now we look to build a bigger, broader package that can begin to think about reconstruction as well. But right now we're focused on refugees, on the region, and on how do you hold it together.
Do you believe that you can have a relationship with Mr. Putin, the invader, where you can go directly into these ravaged cities and provide World Bank support? Or are you basically working at the border like the Red Cross?
Today, we're working through the Ministry of Finance of Ukraine, which still exists and is operational. So they're supporting the basic services in Ukraine. We're not working with Russians in Ukraine or with Russians in Russia. We've stopped all of our operations in both Russia and Belarus.
David, there's a lot of focus on Ukraine and helping the refugees, as there should be. There's also growing focus on nations that rely on Ukraine and Russia for wheat, for a lot of the commodities. I'm thinking of Egypt. 86% of their imports of wheat come from Russia and Ukraine. How are you preparing a package to help some of those countries as they deal with the food inflation and commodities inflation more broadly that they haven't seen before?
Yeah, this is a huge problem for developing countries in general, and especially the poorest ones. People that are inland from ports are having a great deal of trouble getting food because the supplies were cut off. I spoke with the Prime Minister of Egypt on Thursday or Friday last week. Egypt is a major importer from Ukraine, but fortunately they have storage and their crop will be coming in. So as you look around the world, the key variables here are how can global production be boosted outside of Ukraine and Russia. So that would, and you know, the U.S. And Canada and even Mexico are major potential suppliers, both of agricultural products and of energy. So making it productively, rapidly available is going to be one of the key responses of the world to this horrible situation that's hitting Ukraine. I have to say on efficiency, there's lots of things that countries can do, and we urge. For example, in the U.S., the efficiency is constrained greatly by the Jones Act, by the ethanol mandates that are hugely deproductive. They cancel production, and in Europe, they have restraints across their economy on what people can do and what they can produce. So lifting some of that would add to the global supplies and help respond to the crisis.
When you talk about efficiencies, David, how much are you also talking about car-free days or perhaps restrictions on how food is consumed in certain places?
I think everyone can conserve. What we don't want to see is advanced countries hoarding things. It's incumbent on people to allow their supplies to go into the markets, and that allows them to get to the people that need it the most. That's part of an efficiency gain. But I think there are some cost savings that can be done. But as we look globally, the biggest issue is how do you really tackle the output that can be made available by each country. For example, there's nickel supply shortages. The London Stock Exchange stopped its trading of nickel, but Indonesia is a big nickel producer. So there are alternatives around the world, and those can be ramped up as the world responds. The Russia situation right now doesn't look like it will be a temporary one. It's a longer lasting set of problems for the world in interacting with Russia on oil, on wheat, on basic minerals, and there need to be supplies elsewhere.
You just touched on a bigger, broader question, David, and I wonder if we can finish there, please. The risk of an escalation, an increase in nationalism. How do we prevent that from happening?
I think it's very hard to do that. People live in nations and they feel nationalistic and they feel patriotic for their nation. What we need to do, I think, is have a rule of law that's really meaningful. In the 80s and 90s, I talked a lot about constitutional law for Latin America. It was having severe problems forming democracies, and it matters a lot what your original statutes are and how you can implement those. So worldwide, if we keep pushing on transparency, on rule of law, on people finding ways to resolve disputes without fighting, that I think is the way forward. Unfortunately, there arise authoritarian leaders that don't do that. World Bank is in the middle of trying to have good governance for countries as we work with them.
David Malpass, always wonderful to catch up with you, sir. It's been too long. David Malpass there, the president of the World Bank. The risk of nationalism, the protectionism that comes with it, the Reuters report we've talked about all morning, China asking refiners the whole April gasoline and diesel exports. Tom, you wonder who's next and on what beyond energy?
The World Bank here, I would say with the United Nations out of Rome, Italy, have just been absolutely superb on the science of food. We forget, John, the absolute miracle we've seen on food costs. I mean, the United States, with all of our prosperity, in the 40 years from 1960 to 2000, the drop in the percent that we spent on food was jaw-dropping, John, in the United States. And it's an even greater miracle in some of the poor countries.
And Lisa, you heard that veiled threat from the Russians this morning, from the president's spokesman. Russia may rethink energy commitments after the sanctions.
And what that is doing is leading a lot of countries to envision a world without the ties to Russia that they once had. And what will replace that, as we heard from David Malpass?
It will take a while to unravel and unpack all of that. Futures this morning bounce at 1.8% on the S&P. From New York, this is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The duration of this incursion is really going to weigh on the economics of both Europe and the U.S.
We risk seeing a much more entrenched inflation.
The news is moving at lightning speed, and markets have done so along with it.
Investors are pretty calm right now. They're not panicking. They're not running for the exits.
That says to me, I'm frankly looking for opportunities to invest.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A most interesting day, one day before an inflation report. And John, the news today, away from the politics and the war, is a better tape.
We've got a bounce, Tom, at 1.9%. We've got a ton to figure out, though. We've got a ban on Russian crude in America. We've got company after company pulling out of the Russian economy. And now Russia reacts. Kinda. In the last 24 hours, they said they would ban the export of some raw materials and goods. And Tom, we're still waiting for a list from the Russian government.
And John, what was so important there was that conversation with Admiral Stavridis, who brings us back to the war in Ukraine. And we have to remember the overlay of the better news today is a horrific set of events in the nation.
A humanitarian crisis, Tom, which is why I think for so many companies now it's about a moral obligation to pull back. And that's what we've seen develop in the last 48 hours, much more so. This headline from Russia, Tom, a veiled threat from the spokesperson for the Russian president. Russia may rethink energy commitments after sanctions. Will they? And to what degree? That's the risk that's on the table now. So as we start to think about so-called peak sanctions, I don't think we've even got started, Tom, when it comes to Russia and others.
I don't know what peace sanctions means. Lisa Abramowitz, what's so important here is the allied response and the individual response. The defense secretary of the United Kingdom just talking about defensive missiles.
There has certainly been a more united, at least on the sanction front, alliance between the UK and the US, which perhaps have the luxury of being further away and less dependent on the natural gas that, say, Germany is from Russia. However, there has been unity in backing Ukrainians trying to exit the nation, as well as giving all the support without sending troops in on the ground to Ukraine, which could start a bigger conflagration.
John, let's do the data right now because our guest is so important to get to here. I'm going to look at 2-10 spreads, John, away from the gloom of recession. We move back. I'm going to call it 23 out to 26 basis points, a constructive move.
10s at 190, Tom. 2s at 165, and it's 2s that gets my attention. Your 2-year yield, the high of the year, the highest since late 2019. All going into CPI tomorrow. The median estimate 7.8%. But there are some banks, including Morgan Stanley, looking for CPI tomorrow morning, 24 hours, 30 minutes away, with an 8 handle.
John, I'll let you do oil. Swiss franc, we have a weaker Swiss franc, almost out to 102. Certainly good news for global Wall Street. And gold really coming back nicely off the surge that we saw to 2,050, whatever it was, down $33, 2010, John.
It's a break lower on crude to the downside. We break 120 again at 119.60. Brent crude at 124. On the session, we're down around about 3%. On the year, just go to the year-to-date column when you look at commodities. Year-to-date, up almost 60% for both Brent and WTI.
On radio and television worldwide, we thank all of you for listening as we mix up here war coverage, as we did with James Stavridis earlier, and of course the impact here on sanctions, the geopolitics, and then the idea of what to do ahead. Bernstein, and I'm sorry, I forever will call it Sanford Bernstein. Bernstein Private Bank has written some very important essays on the fragile state that we are in. Beata Kerr joins us now, co-head of investment strategies. I love the phrase you have there. The fragile state, in the way you write it, it's not a moment, it's a longer-term state of affairs.
That's right, Tom. I think we have to be honest and realize that there are so many different scenarios that could play out here today. And I think you'd have to have a lot of hubris to say for sure one scenario will play out. And so I think fragile is an appropriate word for what is truly a tragic humanitarian crisis that is now unfolding.
Beata, I hear more and more about taking on a cash position, sit in cash. Does cash work with 8% inflation?
We don't think so. We're not recommending a strategic allocation to cash. We're a little bit underweight equities tactically, but we're actually looking for opportunities to invest. Think about alternatives, think about income alternatives, think about real estate. We really started the year worrying about inflation and assets that could be protective, and we're continuing to allocate towards those assets. But then you're also looking for companies that have pricing power and can be nimble in a fast-changing environment. So I think there's opportunity being created here, and cash is not the right place to be in the midst of this market volatility.
Are you thinking more and more about how gas prices will hit discretionary spending? And where would you be pulling back from, even leaning into, given that story?
Again, where we started the year was a consumer balance sheet that was particularly strong. And when we look at the nominal paycheck and even the real paycheck today in the U.S., we're still in pretty good shape. Now, how long can the consumer tolerate prices at the pump going up to these substantial levels is the key question of the moment. Again, we feel the U.S. consumer is much better positioned than the European consumer at this point, but there's no doubt that there's more vulnerability in the forecast. There's no vulnerability in the earnings forecast as well. So it's something we're watching closely.
And certainly a lot of people are as the prices of commodities surge. And I do wonder how much you're looking at specific commodities as an investment prospect beyond what you have in the past, especially as you see a lot of predictions that this is only going to continue.
Yeah, we think an allocation to a diversified basket of real assets. So that would include commodity futures, commodity stocks, publicly traded real estate, as well as companies that can exert pricing power. So think about hotels. They can change the price every single day. In an inflationary market like this, they are going to do that. The airlines exerting more power, even software companies exerting power. So rather than focus in on one sub-asset class, we prefer a diversified basket, and we would source that really from equities depending on somebody's inflation sensitivity.
How recently have you changed that or increased that allocation? And I ask as we talk to a lot of investment managers who say it's super difficult to really rearrange things in an environment that's moving this quickly.
We look at inflation protection assets like those diversified real assets, really like an insurance policy. We have to recognize that the sensitivity that everybody has is going to be different to inflation, and we're going to scale the weight of those assets based on the sensitivity. And second of all, we're going to say, look, it was always hard to get inflation calls right. It's even harder today.
Wait, but Beata, no, just sorry to interrupt, but have you recently changed? I mean, the past couple of weeks, have you increased your allocation to real assets?
In the past couple of weeks, we have not, because we look at it more as a strategic allocation over time, and we started talking about increasing the inflation basket really last summer, and we've continuously been talking about it over the course of the last 12 months.
Let me go to your career from Harris and Goldman Sachs to Bernstein, and I think that I'm enough of a fossil where I know what happens when inflation pops, which is M&A picks up with a vengeance. Inflation increases the doability of deal transactions. Is that what we don't see out there 2 years? Is going to be massive combinations and transactions?
Well, I think there's a lot of implications that are possible here today. Actually, you're seeing the hard part, Tom, is can we really isolate the inflation impact from the geopolitical impact? And what's really unusual about this environment is that the geopolitical impact is piling on to what was already a challenged supply chain and already a substantial CPI print. And that's what's quite unusual. And that's the balancing act that's going to make it very hard for the Fed to figure out really what's next.
Beata, wonderful to catch up with you to get your thoughts on this market. Beata Kerr there of Bernstein Private Wealth Management. A headline just across the Bloomberg, Tom. This is going to be a big bond sale today by AT&T and Discovery.
It's a huge deal, $30 billion, and this is like, can you frame this? Maybe it's not ginormous like Verizon of another time and place. But what's interesting here, John, is this is about media, and it's about the tumult of technology and media. And it just, to me, all my radar's up, and that it harkens back to her Verizon. You wonder of the media assets of AT&T over to Discovery, CNN, I think Hulu's in there, I can't remember, HBO and all the details. But boy, John, the size and enormity of it shows the scale and risk of this potential transaction, this mating.
The team here at Bloomberg confirming, Lisa, this would be the biggest issue total since AbbVie back in 2019. And Lisa, as you know, as we know, this is coming at an odd time because the primary market hasn't exactly been on fire, has it?
Well, the new issue market, at least for high yield bonds, is essentially all but closed. And in the investment grade bond market, where this would lie, a number of issuers have decided this isn't a great time to raise money, considering all of the uncertainty and considering the fact that spreads, certainly in the investment grade market, are the widest going back to 2020. So very interesting that they're starting this now, despite some of the volatility and frankly, despite what we're seeing among other companies. You know, this is a great question. If they don't have a choice, then a lot of the investors will know that and they'll demand a premium, right? So at what point do you try to time this, and at what point do you just say, look, let's hope for the best and see what happens?
Just in terms of how it will be issued, according to our reporting, 11 parts, as many as 11 parts, the longest portion of the offering, a 40-year security, may yield 3.25 percentage points above treasuries. And this is the issue, isn't it, Lisa? It's a tougher market and it's more expensive.
Yeah, it's a tougher market, more expensive, and you also do have some investors who say longer term, we're going to go back to a low growth kind of slow inflation environment. So maybe you'll get those bidders, but it'll be interesting to watch who comes in and at what value today.
Just confirmation, that story coming from Bloomberg this morning, AT&T and Discovery coming out with a $30 billion bond issue a little bit later. Here's one from Ed Bradford. Shout out to him on Twitter. Tom, milestone of sorts today as the Fed's epic pandemic-related QE program comes to an end with a final $4 billion purchase of the three-year sector. And when we're finally winding this thing down, just ahead of CPI tomorrow morning.
Well, John, you get the love notes. I get all the hate mail, and somebody said, what are you guys doing about the celebration of the end of COVID? And we're really seeing it with deaths under 1,500, not back to the 900 level pre-Omicron, but nevertheless, boy, are we moving in the right direction.
What we all want to know is how Bramo celebrates the end of QE.
Well, what I don't do is on Thursday afternoons,
You're going to stop doing that now?
Well, I don't know. I think I might be a little addicted to it. I got to be honest.
Futures up 77, advancing 1.9% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. In Ukraine, President Volodymyr Zelensky says some civilians are escaping around Kyiv after Russia agreed to open humanitarian corridors. But Ukraine says not all those pathways are open yet. Meanwhile, the U.S. warns that Russian forces are stepping up their bombardment of Kyiv. Democrats and Republicans in Congress have struck a deal on a long-delayed spending bill that funds the U.S. government and includes $13.6 billion for the war in Ukraine. The measure would pay for refugee assistance and to replace weapons given to Ukraine. The UK is ratcheting up sanctions against Russia. It's now banning all Russian aircraft from landing and overflying Britain. The UK is also prohibiting aviation and space-related exports. That ban also covers insurance and reinsurance products. And in South Korea, exit polls in the presidential election show Conservative candidate Yoon Suk-yeol with a slight lead. Less than 1 percentage point separates Yoon from progressive Lee Jae-myung. Yoon is hawkish on North Korea and China and favors closer ties with the U.S. And Bitcoin and other cryptocurrencies are rallying today. Investors appear optimistic about an impending U.S. overhaul of crypto oversight. President Biden will sign an executive order today, which orders government agencies to take a closer look at issues ranging from developing a digital dollar to fighting illicit finance. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Wall Street prepares for the latest read on inflation.
It's going to be a big number.
We are drowning in uncertainty.
Economists predict the highest numbers in 4 decades.
Many estimates now have an 8 handle in front of it.
Not even including gas.
Instant reaction.
Keep an eye on the resiliency of the consumer.
It's not a question of whether we get a recession. It's like, what kind of recession are we going to get?
And what it means for the Fed.
This trend is no friend to the Fed.
Do we lead to a slower growth kind of paradigm?
They're going to want action at the White House.
Inflation in Focus, Thursday morning at 8:30.
I think the pushback that the Western alliances have put together and are continuing to push are good as deterrents for any further activity by Putin.
Bailey Hutchinson there. Miss Kay Bailey Hutchinson, the former US ambassador to NATO. Futures up at 1.8% on the S&P and the NASDAQ, up 2.3%. Crude, 119.61. Let's call it 119.50 now. We're down 3.35%. Just got this from the International Atomic Agency, the International Atomic Energy Agency, out on Twitter. You might have seen some reports this morning about Chernobyl, so let me go through these one by one. Ukraine has informed the IAEA of power loss at Chernobyl's nuclear power plant. The development violates a key safety pillar on ensuring uninterrupted power supply. However, they go on to say, in this case, the IAEA sees no critical impact on safety. They go on to say that the IAEA says heat load of spent fuel storage pool and volume of cooling water at the plant is sufficient for effective heat removal without the need for electrical supply. That update, Tom, coming just moments ago.
Within the swirl this morning, there's the official statement. I'm not really sure what to make of it, John, but it's certainly calming versus sort of what was out in the Twitter sphere.
Some of the reports in the last couple of hours, for sure, Tom,
Let us go to an important conversation. She has been fabulous on the microeconomics of oil, and we're going to pause with Amrita Sen, Chief Oil Analyst, Energy Aspects here. With the tour de force coming out of the financial crisis, which was my great mentor, Meghdad Desai of the London School of Economics. And Amrita, Professor Desai got so upset at a misunderstanding of general equilibrium theory that he wrote a book about it. Tell us about the new oil economics, given this jump condition in price. Is there an oil equilibrium out there this morning?
Right now, Tom, and it's a fantastic question that you've asked, there is no equilibrium in the market. And that's why you've seen prices, not just the level, but the volatility that you're seeing. We've moved up $10, down $10, up $10 in a day. I mean, these kind of numbers very much tell you that the market is struggling to find what the true price is.
These are incredibly complex things. Don't give us the math of it, Amrita, but which part of our disequilibrium, given massive jump conditions, is the disequilibrium we should focus on?
The disequilibrium is originating from the supply side. Obviously, because Russia is unable to sell production, you are going to see some shut-ins. But the reason you see these jumps is absolutely on the demand side. You and I both know that demand is very inelastic. It takes a long time to react to such prices, especially, by the way, governments around the world are reintroducing subsidies. So now suddenly consumers are not even fully exposed to the true price of oil. But that's precisely why you're going to get these big discrete jumps in prices till you get to that point where, okay, demand really starts to hurt and you get back to that equilibrium. The problem is it's searching for that price. It's in a price discovery mode, this market. And whenever it's in price discovery mode, which is very rare, you are going to get huge volatility.
Well, Amrita, let's sit on that point for a moment, especially because the ConocoPhillips CEO came out yesterday and said he does think that prices are getting to a place where we are starting to see demand destruction. You do see airlines actually curtailing their schedules to preserve capital, considering that some of the less flown or less popular routes are consuming a lot of expensive fuel. How much will this make a difference on the margins? How big is that imbalance so that little moves can actually have a big impact?
I think the important thing to bear in mind is that we started this year with nearly record low inventories, and that's why we don't really have a cushion, right? So now if we're talking about losing 2-3 million barrels per day of Russian production, that's how much demand will need to come off. So to your point, yes, we are seeing airlines at the margin curtailing some routes. That's going to help. You are going to lose some demand in Russia as well, in parts of Europe as well, but it's not big enough, especially if you think about Asia. A, not exposed fully because subsidies are coming back. B, they are in a post-pandemic recovery where people are very, very keen to travel both by car and by air. So that's the problem in this cycle, where we are in anything but a recessionary environment. We are actually in a it's a recovery environment, and then we've hit it with a supply shock.
And Rita, given that backdrop, how high could oil prices go based on the sanctions that we've seen already put into effect?
I mean, I would say prices can easily go above 150. Now, beyond that, honestly, does become a number, and this is where elasticity has become very difficult to ascertain as well. Every retail price is different. The governments put on taxes, they put on subsidies, so the exposure is not going to be the same. The oil burden, as we call, on GDP is going to be very, very different. But the reason I say it's above 150 and not like 200 or even higher is, unlike in the past, isn't just oil that's rising. It's natural gas, it's food, it's metal. So it's a very inflationary environment overall, which is why oil doesn't need to do all the work, right, to kind of curtail demand. There are other factors that are really pushing consumers to spend less.
Amrita, as always, thank you. Amrita Sen there of Energy Aspects, crude 119.71. You will know about a range of conversations that could happen in the future between this administration and a range of countries, including those in the Middle East and, of course, Venezuela. Recently, as we understand, there was a visit by US officials to Venezuela. The response of Venezuela, Tom, to release 2 American prisoners. Secretary Blinken out with a tweet just moments ago. We welcome the long overdue release and return of those 2 American prisoners detained in Venezuela. We have more work to do. There is a theory, Tom, and certainly not a secret, that the hope is that by doing so, they allow things to start moving again between Venezuela and America, and maybe take more Venezuelan crude.
Yeah, I can't quote it exactly, but in every crisis, there's an opportunity, and maybe that's what we're seeing here with the extremely fractious relationship between Washington and Caracas. But, John, I would suggest that there's a marginal approach here by the U.S. to talk to many different parties and not just the blunt instrument of talking to one.
Well, the foreign policy here, Lisa, is really difficult. At the same time, you're backing away from Russian crude. You're asking for something from the Middle East. They don't want to take a meeting, a phone call with you, because they don't believe you support their foreign policy effort elsewhere. We're thinking about the tragic events in Yemen. And then going down to Venezuela to deal with someone who is widely regarded as a dictator there, to ask them for more crude, potentially. This gets really awkward pretty quickly.
It gets incredibly awkward, and we do hear that the administration is having many talks with some of the executives of oil companies domestically. How this percolates into a policy, both domestic and foreign, hard to see.
In 24 hours from now, we'll be counting you down to CPI in America and building up to a news conference with President Lagarde. Tomorrow gets important. Futures up 1.9%. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Hours from now, this time tomorrow morning, US CPI drops, and then we hear from President Lagarde. What a moment that will be. Futures this morning up 1.9% on the S&P. On the Nasdaq, up by 2.3. Yields are back through 190 briefly, back down to 189.75 on 10s. Yields up 5 basis points. On 2s going into the print tomorrow on CPI. Highs of the year, the highest since 2019, just short of 165 on a 2-year yield in America, up 5 basis points. Crude 119.20. We've talked a lot about that, down a little more than 3%. Moments ago, just heard from MasterCard, Tom, their spending pulse, retail sales for February, 8.7% year over year. This on the month on month, just slightly above the growth in January, the January growth levels. So that's a read from MasterCard, and we'll get another read on CPI tomorrow and have a bigger conversation, Tom, about what that means for consumer demand more broadly.
Exactly, and we're data dependent on this, John. And again, it's going to be the effects of the war and the distance of America from what we're seeing in Ukraine as well. As we heard from Beata Kerr and others, John, I just think the confusion here 90 days forward can't be mentioned enough.
And Tom, I would suggest how much has changed in just a couple of weeks. Yeah. Literally just a couple of weeks to face down 130 on crude and then back away, face down 140 and back away. I mean, a lot's changed in the last couple of weeks.
Well, the outlooks that we had at the end of the year are basically useless, like all the outlooks Bill Gross wrote over the years. Let's migrate on that, John, to a conversation with one William Gross, former PIMCO co-CIO, that barely describes his contribution to bond investment. He's put out a book which is hugely readable. I wasn't sure what to expect from the stamp collector. I'm Still Standing has a lot of smart notes in it and some extremely frank talk about his turmoil of the recent years. Bill Gross, thank you so much. I love the idea in the beginning of the book, there never was a bond king. I met you the first time at the Waldorf Astoria, and you were almost in tears because you got the bond market wrong. I can't remember, Bill, if it was price up, yield down, or yields up, price down, but you blew it on at that time. You completely blew it. What did you get right that made you the so-called bond king?
Well, I think, Tom, that I from an early stage, I wrote a book called the long-term secular view of financial markets. And it seemed to me that if it could eliminate human emotion, which is what you just talked about on a day-to-day basis, that if you look 3 to 5 years out and had a intelligent forecast as to the direction of inflation and the economy, then you'd have a better chance. Not that you terribly succeed, but you'd have a better chance. And so I think the secular outlook at PIMCO, which was 3 to 5 years, was key going forward.
You are in Indian Wells. There's a small tennis tournament there this week, which will be of great interest to those that follow tennis. And part of it's getting the ball in play and putting the ball back and forth across the net. You started out in the mailroom at PIMCO. How did you get the ball moving on the PIMCO tennis court, starting out in the mailroom?
Well, we had a billion-dollar portfolio. Pacific Mutual did. It wasn't PIMCO at the time. And I just graduated from UCLA Anderson. I had a master's degree. I was clipping coupons, not exactly in the mailroom, but clipping coupons. And I said to myself, wouldn't it be better to get out of the vault and into the sunshine, and maybe you could trade these bonds. Back then there weren't computers. IBM had a 360, et cetera, but you couldn't really move them back and forth except physically. And so most banks and most insurance companies didn't. And so I thought that if I could take 5 million of that 1 billion portfolio and trade it and perform, then we could get some clients and grow a little investment company called PIMCO.
A little investment company that grew quite large. Bill, you talk also about your start, just even with education, with $200 sewn into your pants, going to Las Vegas, gambling, and getting $10,000 to pay for your college education. Parlay that gambling to the markets and how the game has changed. How much has the game changed over your tenure?
Well, it's changed a lot. Since when I started, there weren't really liquid mortgage pass-throughs. There certainly wasn't an interest in foreign bonds. There weren't any TIPS, inflation-protected securities, et cetera, et cetera. And so that and the evolution of financial futures, which is probably the biggest change, introduced liquidity into the marketplace, and it allowed for even a small firm at the time like PIMCO to basically trade and to make money. Financial futures back in the day were cheap, and we could buy a treasury bond through the financial futures market and turn at the time, 10% yield into a 12% yield. And the first mover advantage for PIMCO in terms of all of these categories was quite critical as well.
Bill, the reason why I ask is because we're in an era where a lot of people talk about the distortions in the bond markets by the Federal Reserve, where the Fed is prepared to start moving back from some of their support from their bond purchases. Today marks the last day of those pandemic era purchases, at least the expansion. How much can the bond market really give the same kinds of messages as it did back when you started out clipping coupons?
Well, certainly not as much. There's more involvement by almost all central banks, despite the pullback that you mentioned occurring today. And, interest rates are so artificially low that it's hard for institutional investors or even individual and private investors to make much of a difference. Central banks control the market. I think they're terribly wrong in terms of what they've done, stayed so low for so long, and now we have inflation, not necessarily because of those policies, but probably in large part because of them. And so it's just a difficult market. You try and anticipate the central banks, which has been relatively easy in the past few years because they haven't done anything. But now they're about to move, and it's simply a question of what Powell and others do in terms of the policy rate.
Bill Gross, I've been out to Newport to see your Monroe Trader on your desk of long ago and far away, where you calculated convexity like no one that could do it. And part of the, as you mentioned, the first mover advantage of PIMCO was intellect. I want you to just speak about what you and Dr. El-Arian did when the two of you got together and put intellect first for a buy-side house. Every single buy-side shop had to react and pattern themselves against what you and Mohammed invented. Tell us how you put intellect first at your PIMCO.
Well, we did build a small company, then a larger company of very smart people. And it wasn't just myself and Mohammed. Mohammed came much later. PIMCO was very much a success before Mohammed, but Paul McCulley was very key in terms of Fed policy and anticipating the Great Recession. Chris Dialynis was very important in terms of bringing financial futures to the company. There were lots of others that were innovators, that were mild risk takers, and putting together a group of bond kings and later queens was quite important.
Was the challenges that you had later in your career, and I don't want to get into the soap opera of it, but Bill Gross, were the challenges that you had, like at so many other shops, due to the decline in profitability of the buy side? It used to be a cozy job, Bill. You'd show up for 2 hours, then you'd go play golf, trying to get your handicap up, and that. Bill, the buy side, every single buy side story is about lower and lower and lower revenue and squeezed margin. Is that what you ran into later in your career?
Well, that's what I was advocating. In the bond market, there was this extension of trading into ETFs and into vehicles that charged lower and lower and lower fees. I sense that as a I sense it as a trend because simply as interest rates themselves lowered, went down to 5, 4, 3, 2, 1. You couldn't charge 50 basis points on a 1% 10-year treasury. That's half of the yield, and it was almost an egregious type of situation. And so, fees became important. It became important in terms of my leaving PIMCO because the surviving contingent basically wanted higher yield products, hedge fund types of products, and I wanted to stick to the old total return formula that had done so well.
The total return formula is in a very tenuous moment simply because of where yields are and where inflation is expected to be. Some people consider Jeff Gundlach your successor when it comes to the Bond King moniker. You may disagree, others do. The question I have is, do you agree with his prognostications of a 10% inflation rate this year and the likelihood that the Fed is vastly behind the curve?
Well, the latter, yes. A 10% inflation rate is problematic. We'll see a little bit of it tomorrow, and it depends, of course, on commodity prices, oil prices, and, the wage follow-on. But I do think inflation will be in a 4 to 5% category for the next several years. And does that validate a 10-year at 180 or 85? It does not. Does it mean that there'll be a huge amount of sellers because of the lack of Fed buying? Probably not. As we've seen in the last few weeks, treasuries are a safe haven, much like gold. And so investors are content to stick at 1.8% until the coast clears. I do think, though, that bonds are a risky investment here. Durations are very, very, very low as almost they've ever been. And so when inflation is accepted in the marketplace at 4 to 5%, which I think it might, then bonds are a sale. And once we get above on the 10-year, once we get above 215, I think there's substantial risk. If you give me just 1 second, there's a long-term trend, a 35-year downward trend in terms of the 10-year and the 30-year that hasn't been broken. It's one of the most amazing trend lines that exist in financial markets. And right now, the 10-year at 215 would break the downward trend for 35 years. And so I think that's critical, but I think it will happen.
So you do think that trend will be broken, but do you think that we're going to escape the negative real yield vortex, or do you think that that's going to persist?
Well, it might in certain areas. I mean, there are fewer and fewer negative yielding bonds. I think we're down to 4 trillion as opposed to 15 trillion. And the German 10-year is up at a magnificent 8 basis points this morning. I think ultimately we have to, as a finance-based global economy, negative interest rates are definitely a negative, a detriment to economic growth because they encourage or discourage savers, which is the thrust of investment. If you don't have savings, you don't have investment. And to a certain extent, if you stay down there in negative territory, investors will put some of that money into a mattress, and it doesn't do very well in terms of productivity in a mattress.
We're going to continue with Bill Gross. He's going to stay with us with his new ebook out, I'm Still Standing. Right now, and more timely perhaps because of the invasion of Ukraine, it is a launch of SpaceX. They're preparing that right now. This is SpaceX Falcon 9. It is the launch of 48 Starlink satellites, and you've got to believe that it has somehow changed off of Cape Canaveral than it would have been, Lisa, 13 or 14 days ago.
Well, and actually this is important because it comes at a time when we do have this dominance of the tracking of a lot of individuals through their phones, which is part of how Ukraine actually got ahead of Russia and even tracked tanks. There was an anecdote that actually they could tell where the tanks were because Google Maps was saying that there was a lot of traffic there. So these satellites are integral in the way that we understand the world and that we're operating, and it is a new regime.
This will be a number of minutes here of a launch, and then 56 minutes in is when we would see a deployment. Make that 1 hour, 65 minutes in, we'll see the deployment of the Starlink satellites. We'll leave Cape Canaveral right now. For all of you on Bloomberg Radio and Bloomberg Television, someone who's been of a great support to us over the years, one William Gross, always and forever, of his PIMCO, and of course tenure at Janus as well, out with a wonderful new book. Bill Gross, there is a hilarious moment in the book, and I'm not surprised because I've tried to fire you at least 3 times. Lou Rukeyser went after you on Wall Street Week and said, who is this young Turk? Get rid of him. How did Lou Rukeyser fire Bill Gross?
Well, we always had a question as panelists, and my question was about the fiscal deficit and expanding. And so I thought I'd be cute and bring a rubber band into the studio and fire it at Lou's ear when I talked about an expanding fiscal deficit. I did that. It was a good shot. Missed his ear. He smiled and went on in the conversation, but clearly was very miffed. And at the end, he had his producer fire me. It didn't take long.
An important question. I know Lisa and I have talked about this before. The parlor game of Fed guessing. You've been a piñata on this. Sometimes you've got it right. Sometimes you've got it wrong. Sometimes it's what you believe in and not so much what you think the Fed will actually do. I get it. Is there value to the modern Fed watching, what I call the Fed parlor game?
Well, I think there still is. Debating whether it's a quarter or 50 basis points may not have been or may not be of too much value. But if you can analyze the Fed's rather longer term moves in terms of 12, 24, 36 months, then that's the critical judgment, and that becomes very difficult politically and otherwise. So I still think since central banks control the market, you want to try and guess what Powell and others are thinking in terms of interest rate hikes. And so, yes, I'd say listen closely.
Well, especially at a time when you think that the trend is going to be broken, the downward trend of yields that we had experienced for decades. At what point, or do you think that investors should look to just break even on an inflation-adjusted basis rather than actually get returns from financial instruments the way they've become accustomed to?
Well, if you're talking about tips or on an
in general, because I think that there's been this feeling where you were talking about investing in riskier assets to try to get bigger returns for the likes of pension funds and foundations. Right. And you have a lot of big investors coming out and saying, look, you got to lower your expectations in order to not just lose your shirt in really risky assets. What's your view?
Yeah, correct. I think going forward, and I've said this for a few years now, and obviously not with the FANGs and the high flyers, it hasn't been the case. They've done very well until the last few months. But I think an investor can really only expect 5 to 6% going forward. these are days in which interest rates will be rising. They'll be pressuring corporate profit margins. They'll be affecting the housing market and slowing the economy down. There's less liquidity in the marketplace. And so, a 5 to 6% return instead of a 10 banger like Peter Lynch used to call it, or even 10 to 20%, which most millennials and new investors think they deserve, it's probably a pretty good number.
Bill, if you were restarting your career now, which asset class would you choose as having the most promise?
Well, not bonds. Probably commodities, and not just because it's hot. I wouldn't choose real estate because I think that's been thwarted as well because of the potential for higher interest rates. Bonds, stocks. Stocks for me would still be an exciting young person's type of asset class, despite the lower returns going forward. There's lots to choose. There's lots of a difference to make in terms of analyzing various sectors. And so I don't know. I'd pick stocks. I picked stocks in the beginning, but they wouldn't have me. Right. So I went down and clipped coupons.
Bill Gross, how do our listeners and our viewers, and I love, thank you for the mention of the Bloomberg in your book, I'm Still Standing, where you say you get up in the morning and look at the Bloomberg screen for 5 hours. I mean, that's a great retirement, Bill. But when you get up in the morning, and even with your caution over the years, you've never been associated with the gloom crew. How should our listeners and viewers respond to typically the Friday data and internet dump of gloom out there on the markets?
Well, you should take it very carefully because, Tom, human emotion is critical in terms of an investor and attitudes towards markets. I've been a glass half empty because that's what bond investors are. They have to protect capital. But at the same time, PIMCO and myself rode the bond bull market from 1981 all the way down to a few years ago. And that's a very bullish, optimistic type of attitude in terms of bond prices. Right. So I think an investor has to know who they are and then to try and apply that conservatively to markets.
Bill, you're more qualified on this than maybe 5 or 10 guys in the world. I've been preaching for the last 15 days that Ukraine is a crisis of tangible assets, commodities, things, as Gartman says, things that fall on your foot like an oil drum, etc. You're the king, some would say, of financial instruments. What's different about the financial system now, given tangible asset crisis versus intangible asset financial instrument crisis like what we saw in 1998?
Well, I think certainly liquidity is different in terms of at least Russia's central bank reserves. And I think that begins to affect other countries as well. And then ultimately it affects investors' attitude. Momentum, which is a valid alpha generator, meaning those that follow momentum types of trends have done very well over the past 10 or 20 years as markets have moved. And so an investor has to be cautious of this ever-increasing trend of higher and higher prices and buying the dips because momentum's going the other way. And so I think financially, that's a key consideration relative to what you mentioned with things.
Bill, you've had a history of bold bets throughout your career. What's your boldest bet right now at this moment?
Very few. I'm doing arbitrage, corporate buyouts by Microsoft and Google. Google announced one just the other day. I'm content to take 4 to 5%. Actually, my biggest bet has taken place over the last year. I did very well and have done very well in gas pipelines partnerships. There aren't too many of them, but they yield 8 to 9%, and they're tax deferred. Check your tax consultant. But they've gone up as the FANGs and the high flyers have gone down. And so the last 6 to 12 months have been very good to my foundation.
Bill Gross, good to see you. Thank you so much, and congratulations on the essays within your book, and of course, a wonderful new text as well from Bill Gross. I'm still standing. Lisa, we've got to get back to this crisis, and the good news, I guess, to say today, how do I frame it, Lisa? A pause in the gloom we've seen over the last number of days?
At least in markets, there still is a huge humanitarian issue. There have been some humanitarian corridors opened up so that people can leave. I know Kiev is actually evacuating some individuals as well. We've seen reporting from that. There still is a feeling in markets that they are subject to incredible volatility, and I'll point to this. WTI is falling more than 5% so far on the session. It's the biggest year-to-date decline, and this comes after the incredible whipsawing action. We have seen unprecedented intraday volatility, not just in oil, but in wheat and obviously in nickel, as we saw over at the LME earlier this week.
I'm going to give a tilt to Charles over at Nomura. There's been some real good writing on how ranges change in crisis. And Lisa, on radio, I'm using my hands close together. You have narrow ranges.
Works well for radio.
And then all of a sudden, they're wider ranges. And it's certainly what we're observing across the commodities. I'll be honest, I thought David Malpass of the World Bank was riveting on the immediacy of the food crisis.
I would agree. And talking with the Egyptian authorities to figure out how much corn they have stored, how much wheat they have stored, it reminds you of biblical days almost, this idea of the reality of our world coming back to bite a highly financialized market, how much we see the distortions that have gotten away from the need to eat, the need to go places, and other sort of basic physical needs. I do have to say that, Tom, the financialization that we've seen in the commodity market really coming to a fore right now.
Well, the financialization's there, but at the end, like in the nickel thing the other day, it is about the underlying, and it'll be amazing to see. And again, we will call upon Will Kennedy and our wonderful commodities team worldwide on this, Javier Blas in oil, but there's so many other people helping out in the metals and the softs as well. Speaking of that, we haven't mentioned today, corn with a positive print goes away from what we see. Wheat, I think, with a little bit of a pullback. I don't have that in front of me, and it's certainly, again, good news. This is the Standard & Poor's 500 futures up 73 points, 1.7%. Dow futures up 500 points. A VIX in two big figures, 32.74. Please stay with us on radio and television through the morning.
What we are seeing right now in the market, that rally extending session highs or near session highs for the NASDAQ, up significantly after such a big sell-off. S&P futures up nearly 2%. Euro actually gaining, reversing, as John Farrow was saying, just put everything in the reverse that we have seen over the past couple of weeks. 10-year yields rising, although still below the year highs, although 2-year yields breaching those highs. And crude actually seeing the biggest decline of the year. We'll see whether or not that does hold. Right now, we are looking at a number of headlines trying to figure out what the U.S. policy is. And of course, coming up on Balance of Power on Bloomberg TV and radio, we're going to be hearing from Sam Zell, founder of Equity Group Investments. We will continue to monitor any kind of statements from the White House with respect to Russia, with respect to China. From New York, this is Bloomberg Surveillance.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
After 4 days of losses on the S&P, we have a bounce. From New York City this morning, good morning, good morning. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, putting the pressure on Putin. President Biden taking action against Russian energy.
I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine.
Sanctions mounting, the corporate exodus continues. Starbucks, Pepsi, McDonald's all joining a growing list of companies halting business operations in Russia. Coca-Cola pulling back, writing in a statement, quote, "Our hearts are with the people who are enduring the effects from these tragic events in Ukraine." Russia adjusting its own messaging. A spokeswoman for the foreign ministry reportedly saying Russia's goal isn't, quote, to occupy Ukraine, destroy its statehood, nor to topple its leadership. Team coverage starts right now with Guy Johnson out of Frankfurt and Anne-Marie down in D.C. AMH, I want to come to you first. Does anyone in the government in Washington believe that statement from the foreign ministry this morning?
Absolutely not, especially this government, which over the past few months have been leaking intelligence and been very forthright and almost aggressive on how much they were outlining to the American people and the public about President Vladimir Putin's plans to not just go into Donbass, but also go into the entirety of Ukraine, Jonathan. So when they see statements like that, it's very obvious these statements are directed towards a Russian domestic market. We need to remember that there is really no independent reporting, or very few, I should say, independent reporters right now in journalists. It is all state media, and that has a direct line to the Kremlin.
Guy, you're in Germany today, ahead of the ECB tomorrow. We understand from our reporting, Germany, the main roadblock to broadening EU sanctions against Russia. What's the feeling on the ground now?
The feeling on the ground is that there is serious concern, John, that we could see an energy blockade. That would have a massive and devastating impact on the German economy. We're already starting to see talk of rationing of energy. But closing the pipelines down would have a massive, massive impact. You can see the countries that can take action. The UK, certainly one of them, announcing its transition away from Russian energy yesterday. But the UK, even the UK gets a third of its diesel from Russia, and there were senior officials close to government today suggesting that people maybe slow down on the motorways, turn their thermostats a little bit lower. We're talking about energy rationing here. But if you close the pipelines down, John, you are looking at a major recession, certainly here in Germany and elsewhere across Europe. That is why there is this fear about turning those pipelines off. That is why Germany, our reporting suggests, is pushing back on Sperrbank being restricted in its access to the SWIFT system. This is the problem. Europe has a major, major exposure. Germany, circa 55%. Other countries, that number is even higher in terms of the exposure to Russian energy.
Well, Guy, I think you've touched on the heart of the issue. We've seen the action from the West, from the US, from Europe. We haven't seen the reaction from Russia just yet. Guy, in a conversation at the moment that we've all been having, is this the peak of sanctions? The sanctions peak? I don't even know what that means, Guy, when we haven't seen the reaction from the Russians thus far.
Cause and effect, John. Are we going to get an effect from Russia? Are they going to do the unthinkable and turn that pipeline off? Even through the Cold War, these gas pipelines and energy pipelines were maintained, John. This feels though it is a very different scenario. The severity, brutality, the speed at which the sanctions have been applied to Russia may cause a reaction out of Moscow, but the effects will be absolutely devastating and very long-lasting as well. But you think about what is happening here. The window is closing. The story here in Europe is now one of moving away from hydrocarbons. This is going to accelerate that process. Germany is at front and center in this. It, like so many other economies, is now thinking about how it migrates and how quickly it can migrate away from hydrocarbons, in particular Russian hydrocarbons. The window is going to be closing on Vladimir Putin. It's going to be very difficult to do the same thing in 10, 15 years' time. The opportunity is now. How does he wield that power, I think, is the key question, John.
Guy, really looking forward to the coverage through today and into tomorrow from you from Frankfurt, Germany. AMH, just finally to you. Crude, Brent, 121, WTI, 116. There was a report in the Wall Street Journal that we've discussed a couple of times between ourselves this morning already. Can I just read out that line again from the Wall Street Journal this morning? The White House unsuccessfully tried to arrange calls between President Biden and the de facto leaders of Saudi Arabia and the UAE. AMH, why won't they take his call?
Well, listen, this is Wall Street Journal reporting. I have not been able to get this myself yet. But, Jonathan, you have seen a difficult position or relationship, we should say, with this administration and Saudi Arabia. When the president was campaigning, he had said he wanted to make Saudi Arabia a pariah. Jen Psaki, very early on in the administration, said we will recalibrate our relationship with Saudi in the sense that the president will deal counterpart to counterpart with the king, not Mohammed bin Salman, the crown prince, who is effectively running the country. So this has been a bit of a sore point. And at the moment, what you have is Wall Street Journal saying that they're actually shunning the White House's calls. That would be a pretty big step, given these are the Americans' two biggest allies in the region. They're also two countries, especially when you look at the kingdom, that can really put their thumb on the market and help the administration right now. And not just the administration, help the world in the sense that potentially if you continuously see higher oil prices, this could mean a global recession.
Anne-Marie, thank you. To Guy Johnson as well. AMH and Guy Johnson there from Frankfurt and DC, respectively. We've got a turnaround in this market. 24 minutes away from the opening bell. Futures positive 1.75%. Crude rolling over, down as much as 5 percentage points. Yields on a 2-year, 165, up 5 basis points. We've added some weight to that story over the last couple of days. The highs of the year, the highs we haven't seen actually going all the way back to late 2019, going into CPI tomorrow morning. Let's get to the panel. Crossmarks Bob Dole. Columbia Threadneedles, Gene Tenuso, Joanne Feeney of Advisors Capital Management. Joanne, to come to you first, do you think we've taken down growth expectations sufficiently based on the events of the last couple of weeks?
Well, Jonathan, I think we've certainly moved in the right direction. I think there was definitely a bit too much optimism about the amount of growth we were likely to reach this year, and investors are now, taking another hard look at that. And consequently, they're moving away from a lot of these more cyclical stocks and, looking potentially to find growth in the more secular-oriented growth companies that are out there. So, the higher inflation we think is going to continue for a while because of those moves in the oil market, but also because of higher wages and because of the house price increase that is just now filtering into the official inflation data in the U.S. So, more bad news to come on the inflation front, slowing growth, and definitely a more challenging environment, particularly in Europe. And we'll have to see how that feeds back into the United States.
Europe's facing a tough time. In the US, looking at the Treasury curve, Gene Tenuto, 2s, 10s, just short of 26 basis points, in and around 25 over the last couple of days. What is the story that yield curve right now is capturing?
Well, John, the story is that we're pulling forward the timing of Fed rate hikes, but we're not really yet repricing that terminal rate or how high the Fed will ultimately hike rates in this cycle. So I think we're just sort of putting back to where we were a few weeks ago. And, we'll see next week as the Fed gets started how much guidance they give us in terms of, how high rates will go this year. Our best guess is, they'll start with 25 basis points a meeting. Maybe they can get 4 or 5 done this year. But let's remember the December forecast was only for 3 hikes. So they have a lot of upward revisions to go on the back of inflation.
Bob Dole, last time you and I talked, you weren't exactly constructive on this equity market. You were talking about raising cash. Have you deployed any of that into the dislocation we've seen recently?
Yes, we have, Jonathan. Our view is the 41.14 we saw when bullets started flying 2 Thursdays ago is an important low. Perhaps we've had a test of that. We may need more tests, but we think a lot of the concern, assuming it's contained, which is anyone's guess around Ukraine, Russia, is in the market. As you know, investors' intelligence went below 1. When that happens, that's usually a sign that there's too much pessimism out there. So I want to be bullish, but I don't want to be as concerned at 4,200 as we were coming into the year at 4,800.
Joanne, $1 trillion question, the difference between a bear market rally and a bounce you actually want to get behind. What is the difference?
Well, I think that, the bear market rally we're seeing is partly a reaction to what we've seen since November, which is with the higher interest rate expectations, multiples came down on those high growth stocks, those, zero profitability companies. And so I think we're seeing some reaction to that. So I'm not, suggesting that the whole market is necessarily going to rally here. I think we're going to see now a reverse of some of the reallocation we saw starting last November, where folks ran into these cyclical stocks. And now they're recognizing that aggregate growth is simply not going to be as high as they thought. And if they want to have growth in their portfolios, the potential for appreciation, they're going to have to move back, reallocate back towards some of the secular growth stocks. So I would look for the market, again, not to be a consistent everything up or down, but more a reallocation-driven dynamic where you see some of those secular growth stocks start to bounce, whereas some of the cyclical plays, I think, continue to languish.
Joanne Feeney sticking with us alongside Gene Tenuto and Bob Dole. Fantastic lineup going into the opening bout. Just getting a headline from an aide to President Zelensky saying Ukraine is ready for a diplomatic solution. I want to get you some movers ahead of the opening bout, 20 minutes out. Here's Abby.
John, well, not surprisingly with this rebound rally, whether it's a bear market rally or the real thing, we have some strength on this screen, especially for some of those big tech names. In fact, pretty much a broad-based rally. Tech is higher, including Apple. We also have the banks higher as yields go higher. So rising yields not hurting tech today, but certainly helping the banks. Bank of America, you can see, is up 3.14%. On the other hand, energy, which had been the hot trade, it is now down with crude oil having its worst day since November of 2021. We have ExxonMobil down 4.2%. The travel trade is back as folks are perhaps itching to get out there, the reopening, and the lift that you have from oil being down helping airlines as well. American Airlines up more than 5%, John.
Abby, thank you. Coming up on the program, Americans bracing for more inflation.
The United States produces far more oil domestically than all the European countries combined. So we can take this step when others cannot.
The consumer facing down soaring fuel prices. That's next. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Wall Street prepares for the latest read on inflation.
It's going to be a big number.
We are drowning in uncertainty.
Economists predict the highest numbers in 4 decades.
Many estimates now have an 8 handle in front of it.
Not even including gas.
Instant reaction.
Keep an eye on the resiliency of the consumer.
It's not a question whether we get a recession. It's like, what kind of recession are we going to get?
And what it means for the Fed.
This trend is no friend to the Fed.
Do we lead to a slower growth kind of paradigm?
They're going to want action at the White House.
Inflation in Focus, Thursday morning at 8:30.
We are enforcing the most significant package of economic sanctions in history, and it's causing significant damage to Russia's economy. It has caused Russian economy to, frankly, crater.
The President of the United States, happening right now, an interview with Bloomberg's Maria Tadeo, sitting down with the Deputy Head of the Office of the President of Ukraine. The headlines read as follows. An aide to Zelensky saying that Ukraine is ready for diplomatic solution, going on to say that we can discuss neutrality and the need for a security guarantee. But this line, I think, is important as well. They will not trade a single inch of territory. So those headlines coming from the Deputy Head of the Office to the President of Ukraine, an aide to Zelensky, speaking to Maria Tadeo just moments ago. That interview happening right now. The headlines as follows. They are ready for a diplomatic solution. They can discuss neutrality, the need for a security guarantee. The next line, we will not trade a single inch of territories. I want to head down to Washington. Can we get Anne-Marie on the line just quickly? And I'll turn to AMH, and hopefully we can get Maria Tadeo back with us this hour once that interview is complete. Anne-Marie, I'm going to come to you and just read those headlines again. This from an aide to President Zelensky that Maria's speaking to at the moment. Ready for a diplomatic solution. What they can discuss, neutrality and a security guarantee. What they can't discuss, they will not trade a single inch of territories. Your thoughts?
Well, first, I think this is a welcoming, right? And you actually see some markets moving on this, that they want to find a diplomatic path forward and they want to discuss neutrality. You know, that is a key for President Vladimir Putin. It always has been that Ukraine, as well as Georgia, never joined NATO. And that has really been a lot of pressure building. The second, they want security guarantees. Remember, Ukraine gave up their nuclear weapons back in the day, and this was supposed to be an appeasement as well to Russia. Now, that was supposed to be one of their security concerns for Ukraine, that they would have this security given the fact that they've given up their nuclear arms. And that was supposed to be one of the main bridging points between how Ukraine would dovetail and look a little bit more to the West while still being at least a buffer zone and palatable to the Russians. They want a security guarantee. The issue, Jonathan, is they will not trade a, quote, single inch of territories. What does that mean? President Vladimir Putin has already annexed Crimea. He has also recognized Donetsk and Luhansk. Are these territories going to be off the table for President Putin. You have individuals living in Crimea now with Russian passports. This is where I think it becomes incredibly tricky. But of course, we need to wait for more headlines. A fantastic interview by Maria.
Yeah, looking forward to catching up with Maria, hopefully later this hour. She's in Paris at the moment. Amy, it's just to come back to you, to stack up those headlines and compare and contrast them with what we heard from the spokeswoman for the Foreign Ministry this morning. Are we aligned on anything?
Well, the spokeswoman this morning is basically saying something that is not actually happening on the ground. What she's talking about is that they don't want to occupy Ukraine, but they have occupied Ukraine since 2014, if you consider Crimea. Also, when you consider the Kremlin-backed separatists in the Donbass region, and they also don't want to put up a different government. But that has been a key for President Putin since Yanukovych had left Ukraine, and they looked west and wanted to create a more European Ukraine. They are filing for EU membership. They have been asking to join NATO. But, Jonathan, we need to remember this is directly targeted to a domestic audience in Russia. We have to remember that right now, Russians are consuming news that is basically the Kremlin garnered news, right? This is all coming out of their propaganda machine. There are very little independent journalists right now in Russia. So everything you hear from spokespeople in Russia are going to be geared towards Russian individuals who are waking up every single day questioning why their savings are basically ruined, the ruble is in free fall, and why some of their favorite brands like Starbucks, McDonald's, Zara, H&M are leaving their country.
Anne-Marie, thank you. We'll catch up a little bit later this hour. That interview, I'm told, ongoing with Maria today, are the headlines as so far, though, from a Ukrainian aide to President Zelensky. They won't trade a single inch of territories. We can discuss neutrality and the need for a security guarantee. Look forward to getting Maria in front of a camera. Off the back of this, euro-dollar back through 110. 110, where are we now? 110.30, 110.29 on euro-dollar. Equities pushing higher as well on the S&P 500. We've seen that all morning, haven't we? On the S&P, we pushed higher again by 1.8%, on the Nasdaq by 2.3%. They're seeking a clear response to their EU application. Another headline coming from that interview. I'll stay on top of that. Bob Doll, I want to come to you. You've been listening to this. How do you operate in a market like this one, where we're so headline-driven around one single story? And I'll throw another headline at you. This came from the ECB, from our reporting, said to be bracing for hits to banks' loan books from the war. So even if you get some kind of step back, de-escalation, Bob, we still haven't worked through all the issues, have we?
For sure. Look, if you want to talk about interest rates and the Fed and earnings and the economy and PE ratios, the three of us can give you some value added there. But you ask us what's going to happen Russia-Ukraine, like everybody, it's a shot in the dark. Uncertainty levels, when they're the highest, is when markets bottom, and vice versa. When there is no uncertainty, the markets have a peak. So I think what you do is you trade around the headlines. So I'm likely on an up 2% day to do a little more selling than buying on down 2% days the other way around. It sounds a bit reactionary, but I think it's taking advantage of these big price swings, as you say, on the headlines. We just don't know.
Joanne Feeney, your take, please.
You know, Jonathan, I think it really depends on what sort of investor you are. You know, we have income investors who I think are well positioned to sort of ride out the volatility. You know, as Bob just said, we're in a period of elevated uncertainty. We're going to have a lot of volatility in the market because of that. And folks want to be able to sleep at night. And so if you build a portfolio where they have, you know, a lot of very solid dividend-oriented stocks that have some insurance against this volatility, whether it's a defense company like Lockheed, consumer staples like a Philip Morris, you know, there are ways to ride out the volatility that are a bit more comfortable than others. If you're a growth investor, it's obviously been a lot more challenging, and we are taking advantage of some of these dislocations to move up in quality, to higher quality growth names that are still really going to be, I think, well positioned for more of a second half recovery. Not because we're going to get resolution to the Russia situation, but because I think investors are going to start moving towards those secular growth names as aggregate growth slows down some more.
Gene Tenuto, final words, sir.
Yeah, I think Bob said it right in terms of, you know, we don't know what's going to happen with the geopolitical situation, but if we think about how it impacts our markets, it's really through the channel of financial conditions. And the tightening of financial conditions that we have seen this year, and especially in the last 2 weeks, has actually taken some of the pressure off the Fed and some of the tightening they need to do. So I think from a portfolio standpoint, the implication of that is that correlations can return. So bonds can be a diversifier to other risk assets like credit or like stocks. And so if you're wading back into the market, it's one where you want to do it in a diversified way, where you add some risk at higher yield levels or lower PE ratios, but also add some duration along with that because that diversification is starting to return.
Gene Tenuto, Bob Dole and Joanne Feeney. Those headlines from that Ukrainian aid: we will not trade a single inch of territories. We can discuss neutrality and the need for a security guarantee. Maria Tadeo sitting down for that interview. We're going to catch up with her next. From New York City with futures up 1.8%. This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Minutes out from the opening bell, equities session highs almost up almost 2% on the S&P 500. Want to touch base with Maria Tadeo, joining us from Paris, who just sat down with an aide to the Ukrainian president. Maria, take it away. What did you hear?
Well, you know, this was a very long interview that we did today, just a few minutes ago, and I asked him a number of questions that really are the hot issues here. And I said to him, would you give up on NATO membership? And then, you know, he did not fully say, no, I would not. But he did say, we can talk about neutrality. Ukraine is open for it. But we need ironclad guarantees, and not just from Russia, but also the United States, that Ukraine would be safe. We've seen this in the past. We gave up our nuclear weapons for protection, and in the end, it did not work. So he mentioned that word. He talked about neutrality, but with guarantees. And in my view, these are guarantees that would involve not just Russia, but also the United States and in multiple other countries.
Maria, what we'll do, we'll try and turn some of that interview, play out some of it in the next 30 minutes or so. Let's catch up with you again in just a couple of minutes. That headline that came just moments ago from Maria's interview: we can discuss neutrality, we need a security guarantee, we won't trade a single inch of territories. Equities up almost 2%, crude is lower, much lower, bond yields are higher, much higher, going into CPI in America tomorrow. Coming up, Wall Street playing catch-up, strategists cutting their targets with stocks off to one of their worst starts since 1900. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
So there's hope for a diplomatic solution. I think the key word we'll all agree is hope there. Too much hope, too little hope. Right now, futures up 2% on the S&P 500, on the Nasdaq up 2.5, on a Russell up 1.7. Equities with a lift going into the opening bell. There's your opening bell. Switch on the board and get to the bond market. Yields higher. Going into CPI tomorrow up 6 basis points at 190.79. Twos back through 160. CPI in America expected to come close to 8% tomorrow morning. Euro dollar session highs. There we go. 110.50 almost, up 1.35%. And crude lower, as you might expect. It's the last couple of days upside down. We're down a little more than 5% to 117. At the open, about 20 seconds in, we're up 0.9% on the S&P 500. The winner of the year, the loser of the session. Energy down 0.75%. Information technology up by 2.7%. We have seen company after company over the last few weeks pull out of Russia. This from Reuters just moments ago. Nestle suspending capital investment in Russia. So can we find a diplomatic solution? Moments ago in the last 20 minutes or so, Maria Tadeo sat down with an aide to President Zelensky. Take a listen.
If you ask me whether there is a diplomatic solution, surely we're ready for the diplomatic solution.
Team coverage starts right now with Maria Tadeo out of Paris and Anne-Marie down in DC. Maria, let's come to you first. For the people that haven't seen the headlines, haven't heard your interview yet, go through all of it for us.
Well, there's three major things that he said in this interview. And again, this is someone who's very close to President Zelensky and works very closely with the Ukrainian government. And of course, he told me, one, there is still a diplomatic solution. There is a diplomatic way forward here. When it comes to neutrality, remember, this is perhaps ditching that pledge to join NATO, to be a neutral country in this. Well, he told me they can talk about neutrality, and that is on the table, and it could be an option. But he did say we need written, ironclad, crystal clear guarantees from everyone involved. And it's not just Russia that we need here. It would probably also entail the United States and a number of other countries. He also said they don't trust the Russians. They do not trust Vladimir Putin, but they can't ignore the fact that Russia is a neighbor, and it is a big neighbor. I also asked him about the speculation that Ukraine could go into a soft deal in which they agreed to concede perhaps Crimea, that this is now fully Russia. Remember, the Ukrainians say Crimea belongs to Ukraine even to this
state and the Donbass. Remember, this all started because of the two breakaway regions. And he did tell me, and this is a straight quote, that Ukraine is not going to trade a single piece of its territory. Every inch of Ukrainian territory belongs to Ukraine and the Ukrainian people. He also reiterated, by the way, that they hope that they can get a NATO deal, on the fighter jets. He said, if we're not having a no-fly area over Ukraine and we continue to fight a blitzkrieg-style war, then at least we would need fighter jets. And we hope that there's a deal completed between member states of NATO, but in particular Poland and the United States, quickly, because people are dying.
Maria, when are the next round of talks between Russia and Ukraine?
Well, that is scheduled to happen next week. It would be a Monday. Now, you see, again, that there has been some softening in the language coming out of Russia today saying, well, we don't want to occupy Ukraine. And by the way, Jonathan, when they say we're not going to occupy Ukraine, the reality is this is a huge country, 40 million people that are armed and clearly fighting every day. So occupying Ukraine right now does not look easy for Russia. They also say we would be okay with President Zelensky staying in office, but the Ukrainians always say we're not going to be a Russian puppet. If Zelensky stays, is to lead an independent Ukraine. And then, of course, you have the biggest question of all, which is what to do with NATO. If Russia does not give the guarantees that Ukraine wants to see, and remember, it would not just be Russia based on my conversation. They also want the United States overseeing this. If Russia does not agree, then, of course, for Ukraine, this is a no-go. And by the way, I asked him, how long can you hold on? You know, how much fighting can you do? And he said, we're going to continue to fight until the end. And we have, quote, blind faith that we're going to win this war.
Trust is clearly an issue here. So let's go through this piece by piece. And Anne-Marie, I'll bring you the Russian response this morning. This is what got things going earlier today. They called it a special operation, their phrase, not ours, and certainly not the Ukrainians' phrase either. They have no goal to, quote, occupy Ukraine, destroy its statehood, nor to topple its leadership. And Anne-Marie, the first thing you said to me when I asked you, does anyone in Washington believe that? You said they don't. So how important is the lack of trust to build a bridge between these two positions right now?
Well, it's an incredible lack of trust, Jonathan, but there's been a lack of trust between Kiev and Moscow and Washington on the side of Kiev since 2014. When you hear the Russian Foreign Ministry spokeswoman say that they do not want to occupy Ukraine, Ukrainians immediately hear that and they almost roll their eyes because Russia has been occupying a territory of Ukraine since 2014. That was Crimea. They've been backing the separatists in Donetsk and Luhansk, which just weeks ago President Putin recognized as separatist states. We should note, he recognized Crimea as a separatist state in 2014, and 24 hours later, he then annexed it. So when I hear this Ukrainian aide say to Maria that they do not want to give up a single inch when it comes to territory, this is going to then come down to, if this was a negotiating table, Crimea. President Putin is not going to give up Crimea. He would be in a worse territorial position than he was before he invaded Ukraine.
Big move at the opening bell, up 2% on the S&P. Four-day losing streak, we bounce. To both of you, fantastic team coverage, brilliant interview. Maria Tadeo from Paris to Anne-Marie Jourdain out of Washington. AMH, thank you. So there's the move in the equity market. The headlines read as follows from a Ukrainian aide. We can discuss neutrality. We need a security guarantee. We will not trade, quote, a single inch of territories. For the movers around the opening bell, about 5 or 6 minutes in, here's Abby.
John, it is a very solid rally on the day. The S&P 500 up about 2%. Its best day in more than 2 weeks, and it's a broad-based rally. Tech is one of the best sectors, being led by Apple, but the banks right now on top. When's the last time we saw that? Wells Fargo up 4.9% in sympathy with rising yields. Tesla is higher, also a tech/EV car company. And then American Airlines, the travel trade, is on a rebound, up 5.2%. On the other hand, what is losing? It's all about energy and natural resources. You have Transocean, the offshore driller, down 6.2%. Occidental Petroleum down 3.3% in sympathy with oil down. You have Newmont Mining down 4.7% as some of the metals fall. And then Mosaic, the grains and fertilizer company, down 5.3%. So a real reversal of what we've been seeing over the last few days, John.
A slight reversal as well for the forecast for the year ahead. Abby, thank you. Let's get to Kaylee Lyons on that. Hey, Kaylee.
Hey, John, well, you're starting to see more strategists cutting their targets for year-end. Citi just the latest. Remember, in January, the target was up from 4,900 to 5,100. Now it's getting cut all the way down to 4,700. And Citi isn't alone. You've seen Andy Yardeni over at Yardeni Research doing this, BTIG doing this as well, playing catch-up to a market that has fallen really quite far this year. It's been the worst, among the worst starts to the year we've seen in the last century, John, down more than 10% year-to-date on the S&P 500. And, of course, this is happening in tandem with elevated concern around inflation, with commodities up 30%, break-even yields in and around record highs along with that. And it raises a question of what the impact could be on corporate profits and, of course, what is the resulting monetary policy response to inflation and what do tighter financial conditions mean? So that leaves investors looking for a hedge here against inflation. The obvious place, those stocks that benefit from higher commodities prices. That includes the metals and material stocks, energy as well. They're in orange and blue here on this chart as we've seen oil prices in purple going up and metals prices, of course, going up as well. But I want to point to one individual stock in particular that has been benefiting in recent days, John, and that is Caterpillar, coming already off of its best 5 days, going all the way back to the end of March 2020. It's now higher for a 6-day today. It obviously makes mining and construction equipment. And one analysts are now saying that with Russia locked out of commodities markets, capacity and investment is going to have to be expanded elsewhere to make up for it. And that in and of itself could become a boon for Caterpillar, making it also a kind of inflation hedge, John.
Kelly, thank you. Back with us, Bob Dole, Gene Tenuto, Joanne Feeney. Joanne, I want to come to you. Lou Wank here at Bloomberg wrote a story yesterday, really interesting, about worrying about that post-COVID melt-up all over again. I think the biggest challenge for investors sometimes is to live in the future when you see devastation playing out right in front of your face. 2 years ago, it was the pandemic, and right now it's a humanitarian crisis in a place like Ukraine. How hard is it to do that, Joanne, to live in the future 12 months out, 18 months out, with things like this happening?
Yeah, John, we like to remind our clients that you don't own stock in a company for what it's done for you in the past. You own it for what it can possibly do for you in the future. And that's why when you look at the history of the market, whether it's wars, conflicts, recessions, right, the market always comes back before the real economic data improves. And I think, investors sitting on the edge of their seats right now, wondering, when this thing is going to turn around. But it's really important to step back from these headline risks that we're talking about and think about how the world has changed in terms of opportunities. That Caterpillar story was a good one, but also defense companies, for example, right? We're going to see now an increase in defense spending among the Western alliance nations, and that's going to last for a number of years. We've liked those. We've owned them for a long time. We always thought of them as insurance against geopolitical risks. But longer term, if you're going to look forward, like you just suggested, Jonathan, that's one place to look. And the banks got oversold. People aren't recognizing that, yes, there's going to be a slowdown in growth, but we're still in a recovery period. So you really do have to look forward. And again, look at the history of the market for those lessons.
Bob Dole, where do you think energy and basic resources fits into that story, that discussion Joanne and I are having at the moment? You've got these commodities, pretty much all of them, trading in massive backwardation, this huge, huge amount of demand for everything up front now and limited supply. When you look at 12, 18 months, is that a world maybe we've got to get used to?
I think we will back off as we get answers to Russia-Ukraine. We're making the assumption that a year from now we'll still be talking about this, but it's going to be in the background as opposed to the only thing we talk about. In that environment, probably like today, oil prices and other commodity prices come off somewhat. There's a premium in there because of the uncertainty around supply. We're going to have a lot of government spending a lot of time working on the supply issue for energy going forward. How can I be more assured of my own supply? And that has implications along with defense spending, which will be higher. Russia, Ukraine means growth's a little slower and inflation's a little higher.
Gene Tenuto, thanks for your patience as we worked through that breaking news. You and I have heard a lot over the last few days that the Fed's got to back off. That's a good thing. I've heard other people say that, how can we call it a good thing that the Federal Reserve has lost policy flexibility with inflation set to come into tomorrow at around 8%. You're still looking for 5 to 6 hikes this year. Why do you think they can make that happen?
Well, look, we have to realize that the inflation that we're witnessing right now is entirely outside of the Fed's control. What the Fed can do is observe that demand is higher than supply. It cannot influence supply, but it can bring down demand by crushing the economy. You got to be really careful with that. That's a politically unpalatable solution. So they're going to move slowly. They're going to move gradually. And I think what they're waiting for and hoping for is some improvements, not only in supply chain bottlenecks, but in some of these geopolitically driven commodity spikes to help ease some pressure off their back. If we get to the second half of the year and they don't have that easing, that's where I think we get in a much tougher scenario for monetary policy.
To all three of you, thank you very much for being patient as we work through the breaking news and the opening bow. Gene Tenuso, Bob Dole, and to Joanne Feeney, thank you very much. 12 minutes into the session, equities pushing higher. Coming up, the US turning up the pressure on Russia, continuing to strain global markets, and the Deputy Chief of Staff to the Ukrainian President saying this.
We are ready to talk over a large spectrum of topics, but unfortunately for the time being we do not see that kind of readiness from President Putin himself. So we ask the world community to assist us in having these direct negotiations, to sit down with Putin at the negotiation table.
That's next. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
To be very careful with Russian statements, be it good statements or bad statements. We have many propaganda statements throughout this 2 weeks of the war, but very important what is taking place on the ground. What is taking place on the ground is a continuation of fighting, continuation of encircling or trying to encircle some cities and towns in Ukraine, continuation of trying to encircle the capital of Ukraine, Kyiv, continuation continuation to encircle a big city in the east of Ukraine, which is Kharkiv, continuation of bombarding and shelling over the civilian objects of Ukraine. So that is why we are absolutely resisting, like you rightfully said, during this war, and that's what we'll be doing this. If you ask me whether there is a diplomatic solution, surely we're ready for the diplomatic solution. You know, there were 3 rounds of negotiations already on the level of delegation. Tomorrow, our Minister of Foreign Affairs will meet together with the Minister of Foreign Affairs of Turkey, with Foreign Minister Lavrov. But very important that my president is ready to have the direct negotiations with President Putin. We are ready to talk over a large spectrum of topics, but unfortunately, for the time being, we do not see that kind of readiness from President Putin himself. So we ask the world community to assist us in having these direct negotiations, to sit down with Putin at the negotiation table.
So you make it clear that for this to be a solution, or for there to be a solution, President Zelensky will have to sit down with Vladimir Putin. You still believe that that meeting needs to happen?
This meeting needs to happen in order to bring end to this awful war. But it will under no circumstances be on the Putin rules or being under Putin ultimatums. Our first and foremost precondition for having such kind of negotiations is the immediate ceasefire and starting with the withdrawal of Russian troops from the territory of Ukraine.
The context for the headlines over the last 30 minutes or so important. An aide to President Zelensky sitting down with Bloomberg's Maria Tadeo. The top headlines there. They can discuss neutrality. They need a security guarantee. They will not trade a single inch. They will not trade, quote, a single inch of territories. Anne-Marie down in Washington, catching up with us now down in D.C. Anne-Marie, you heard the demand there. The objective. How do we get these two leaders to sit across from each other?
Well, he also talked about what's going to go on tomorrow, which is Dmytro Kuleba, the Ukraine foreign minister, will be going to Turkey to meet with his counterpart, Sergei Lavrov. So I think that will be a critical meeting. And now you have a little bit of the potential list that the Ukrainians want to get the Russians on board with. The hardest thing seems to be the territorial guarantees, Jonathan, because as we've said, Russia has occupied Crimea. There are Russian speakers there. They have now Russian passports since 2014. Ukraine says that is still a territory part of Ukraine. It was illegally annexed, while Russia believes it is the reunification of Crimea with Russia. So this is going to be one of the biggest sticking points. When he talks about security guarantees, I go back 30 years, the fall of the Soviet Union. There was a security guarantee from Ukraine to Russia that they would get rid of their nuclear arsenals. In the fall of the Soviet Union, the end of the Cold War, the nation with the 3rd biggest nuclear arsenals was Ukraine, some 5,000 worth. They gave their security guarantees, which is why they are in also a precarious situation right now where they don't really trust their neighbor.
Bridging the gap and a lack of trust. The lack of trust is so important with that in mind. Anne-Marie, repeatedly, you and I have gone over that statement from a briefing from the spokeswoman to the foreign ministry in Russia today. The Russians still call this, quote, a special operation. So when they say things like, quote, we don't want to occupy Ukraine, destroy its statehood, nor to topple its leadership, we've seen the images, the photographs, the video on the screen. And AMH is heartbreaking. And to everyone else looking in, to those in Ukraine experiencing it, it doesn't feel like a special operation. It looks like an invasion. How do you establish any trust with someone who calls it a special operation when to everybody else, it's an invasion?
Well, this is at really the heart of the issue, and also the deeply devastating humanitarian part of this issue as well. And there's lots of reports that you have Ukrainians that have family and friends in Russia who say to them that's not true, because that's not the information that they are getting from their state-run, Kremlin-run media. And it is heartbreaking, Jonathan. I have friends who've told me about their mothers sleeping in bomb shelters for 6-7 days and having to evacuate out. I have a friend that has a 99-year-old grandmother in Kiev who refuses to leave her home. These are people who are struggling at the moment. And then you have other reports from non-governmental organizations, aid organizations, talking about corridors, humanitarian corridors that Russia said that they would have, but that they go to Belarus or Russia. That is not where Ukrainians want to go at this moment. And when you hear from the spokeswoman, Maria Zakharova, the foreign ministry spokeswoman, talk about this special operation and no goal to occupy Ukraine, This is the same woman, Jonathan, who also told us Russia had no plans to invade Ukraine.
Just finally, Anne-Marie, is there any evidence whatsoever that the pressure that's built off the back of the sanctions deployed over the last couple of weeks has actually started to reach Vladimir Putin, the Russian president? Is the pressure actually building on the Russian president? Have we seen any evidence of that whatsoever?
We have, in the sense that they're now coming out and saying that they might have their own sanction tit for tat, in the sense that they might stop exports of some crucial commodities. We're waiting for that list. I also, Jonathan, spoke yesterday to the former Yuko CEO, Mikhail Khodorkovsky, who said that there is pressure building and that he believes that there could be a regime change in Russia because of this. One thing Russians will always say to you, if they did not agree with President Vladimir Putin, especially in his foreign policy orbit, that there was a stable economy. After their 1998 crash, financial crisis, tumbling of the ruble, that they felt that they had jobs, access to the West, they had Western companies, they were able to travel. This is something that was completely cut off for the everyday Russian.
Anne-Marie, thank you. AMH down in Washington, D.C., a tremendous interview from Maria today. I was sitting down with an aide to President Zelensky. The Ukrainian aide saying we can discuss neutrality, we need a security guarantee, we will not trade a single inch of territories. 23 minutes in, equities up by 1.65% on the S&P. We were already pumping higher through the morning. We back away from session highs on the NASDAQ up 1.9%. Brent crude this morning looking like this. We're negative 4.6%, 122 on Brent, backing away from the 140 we almost saw on Sunday evening. From New York, up next, your trading diary. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's the main theme this morning. Hopes for dialogue. Hopes for a diplomatic solution, hopes, and a bounce in the equity market, up around about 1.7% on the S&P 500, on the NASDAQ up by 2 percentage points. That's the price action. Here's the trading diary. We'll get JOLTS data at the top of the hour. Job openings in America, the EIA crude oil inventory report, 10:30 Eastern. Secretary Blinken holding a joint news conference with the UK Foreign Secretary, 11:15. The big one, US CPI tomorrow morning, an ECB rate decision, and seconds after that CPI report in America, we'll have a press conference with Christine Lagarde. Looking forward to being with you tomorrow. Thank you for choosing Bloomberg TV. This was the Countdown to the Open. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari-sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the number fever campaign. Del Fierro thought Pepsi's number fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2000,